Woke up late, hit the bell, markets open, straight to hell. Leverage high, nerves are fried, but I'm in too deep to bail. Shots are bleeding, red tsunami, bought the dip, hello tsunami. One more contract, double down, now I'm hanging by a thread. I was chasing tickets like they owe me rent. Now the broker's knocking, saying pay your debt. I was dominating, but my hands got wrecked, and my P&L looks like a fucking mess. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, 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 down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing. Took a loan, maxed the bet, thought I'd ride that rocket jet. Now my balance looking like a post-crash cigarette. Saw the news, bought the hype, should've known it's all a grift. Now I'm baggled in the stock like it's my only Christmas gift. Tried to hedge, got wrecked, tried to pivot, lost the bet. Took a swing, caught a knife, now I'm drowning in regret. Told myself I'll play it smart, just one more and then I'm through. Now I'm outside in the rain, screaming please just break even, dude. I was chasing tickers like they owe me rent. Now the broker's knocking, saying pay your debt. I was dominating, but my hands got wrecked, and my P&L looks like a fucking mess. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, 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 down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing.
Oh, brother, oh, brother, oh, brother.
Well. Looks like there's a little bit of red in the market this morning. Folks, it's been a long weekend, and apparently, in our brief moments apart, everything broke apart. Our hearts got shattered, our bank accounts went up, and our positions went completely sideways, folks. It's painful. That's a painful one. Folks, if you've been sleeping under a rock, if you didn't know what played out over this holiday weekend, happy MLK Day to all of you. A lot happened. You could say that the Greenland situation kind of boiled over. And Trump said, I want Greenland. Seemingly the rest of the world said, you're not allowed to have Greenland. He said, all right, I'm going to tariff the fuck out of all of you. And they're like, what? Come again? Don't do that. We're going to tariff you back. And he said, you're going to tariff me back? I'm going to tariff you even again. Oh, when is this all happening? Right when all the bigwig autocrats of the world are running Davos? Yes, they're all there talking right now. Trump speaking tomorrow to pepper on a little bit of sprinkles of volatility. Let's have the Supreme Court maybe tell us about the Trump tariff decision today, finally ruling on it, potentially at 10 a.m. Let's have another Supreme Court decision on the Lisa Cook case and Fed independence. Oh, let's have an FOMC meeting next week to decide what's going on with all this. Folks, it's all volatility. Volatility has returned, and we are just white knuckling this roller coaster right now. So I hope you got enough rest and relaxation over the long weekend, because we are going to be burning the midnight oil this week. It's going to be a wild one. So we have Trump popping off with Greenland. I'm going to be covering that. Potential Supreme Court decision today at 10 a.m. Inflation report setting up the FOMC meeting. Another Supreme Court with Fed independence. More macroeconomic data drops. A Trump speech, that's tomorrow. We're in earnings season, which I actually, until this moment, just forgot about. Folks, Everything's going on. We have gold, silver hitting an all-time high. Bitcoin was recovering, just got hit. Equities were near the all-time highs. They're getting hit. Japan's on tilt. China's on tilt. It's going to be one of those Taco Tuesdays, folks. It's going to be one of those Taco Tuesdays. I love this. So much entertainment. There's entertainment everywhere you look right now. We have a lot to get into. But my question for all of you, before we really get going, before we cover the news of what's happening, what's not happening, my very just, I guess, intro question for the day. Are you buying this dip or are you selling right now? Are you bullish right now, buying the discount? Or are you selling because you think it's going to get worse? Are you bullish? Are you bearish? Are you buying? Are you selling? Number one, number two, bullish, bearish, buying, selling. Just let me know in chat. I kind of want to get a quick idea, a vibe of where the community is at. Buy every dip. Buying the dip. Buying. Ain't no dip in silver. Yeah, gold and silver are at new all-time highs. Vol's up too. Selling, adding to the position. Selling, Trump's buying the dip. Buying, this is not a dip. This is the beginning of a real crash. Waiting for the right opportunity. The way Trump is moving, hard to be bullish. Too soon to buy. Bearish this week. Cycle low. Good morning, gang. BTFD selling first. Going down more for sure. Oh, for sure. I've been piling in gold and silver since 2016. That's a disgusting trade. Congrats to you. Wanting to buy, but not sure. Dipping the buy. Buy the dip, baby. All right. So we have some people who are negative Nancy's here saying it's going to get a lot worse. Actually, we had one commenter guaranteeing it. And then we have a lot of other people who are more in the mode of buying the dip. Based on the current set of information and also paying attention to how the whole Trump tariff debacle has played out for an entire year now, I personally am much more in the mode of buy the dip. Now, does that mean I'm going to buy it out of the gate? No, I kind of want to see what's going to happen today. I kind of want to know what's going to have the Supreme Court decision. I want to know what's going to be happening with Trump's speech tomorrow. But I do believe that just generically, the dip from last week to this week, I do believe in not long of a time period, we're going to be looking at this as a buy the dip opportunity. I have no real reason to think that this particular situation is going to spiral out of control. As much as it might seem as if Trump is a bull in a China cabinet, he understands that he's not just playing with all the cards, he's playing with the entire deck. This is one of the benefits of being the largest economy in the world, of like, just this is the benefit of being the United States. As other countries might want to say, hey, we don't want you to do that. We're going to threaten to raise tariffs and everything. He understands that if it's a race to zero, we're starting from a higher level. So as we implement maybe economic constraints such as tariffs or things of that nature relating to interest rates and currencies, the other world powers, regardless of size, is going to hit zero first because we're bigger than all of them. So once again, that doesn't mean that there can't be extreme pain for everyone involved in the meantime, but the other side's like, we're playing a game of chicken, but like I said, we have all of the cards. We have the road and the car and the chicken. So it'll be crazy to see how this all plays out, and obviously I'll be doing my best this morning and throughout today's show to kind of give you guys a foundation of what's happening, and more importantly, I'm really excited for the first hour of trading today to see how the big money is positioning itself. But if you have to ask me, I think most of the pain is already in, unless we get a new development at some point this week that somehow makes it worse. But remember, all of this news, it's now already priced in. Like everything that has played out over the weekend, even though the equities market was closed yesterday, well, global markets were open. We have futures market open for like kind of a half day period. A lot of this stuff, like traders, especially the bigger players, have already like kind of showcased their opinion of it, and where we're seeing prices right now. Once again, this is digesting all of the news. Now, that doesn't mean that there's not new news. Of course, we're getting new news like today, and soon, potentially within 52 minutes, we're going to be getting a Supreme Court, maybe a Supreme Court decision. So lots to consider. So I just wanted to see where you guys are at. I wanted to give you guys my very quick TLDR of I am personally in a buy the dip mode, but we're going to see how things play out. And on that note, let me kind of do my job here. Dow futures tumbled nearly 700 points after Trump threatens new tariffs over Greenland. So this is the major development that's kind of brewing since last week, but from Friday until this moment, it really, really took hold. And if you saw the update video yesterday, you know we have officially the return of the Tariff King. Folks, I did not make this. AI did not make this. This was a post from Donald J. Trump himself. He posted this on January 16th, the Tariff King. And I'm going to show you guys this a little bit later. But look at the version of the simulation we live in. If you think life is real and anything matters, dude, Trump posted this. The sitting president of the United States posted him there with Marco Rubio and JD Vance. Greenland, U.S. territory established 2026. He just posted that today. And you might think that this is one of the most wild things that the president has ever done. Obviously, this is going to be AI generated. But what if I told you his trolling did not stop there? He actually took it to another level by posting this. These are all of the leaders of basically Europe, and you have some Fed, but these are all like prominent figures. Zelensky's right there. You have the president of France. You have the EU leader. Like, you have a lot going on. And he posts a picture of him like bullshitting with them, and it's the U.S. taking over Canada, Greenland, and Venezuela. Dude, this guy's trolling knows no bounds. Like, this will go in the National Archives. Please, for 1 second, realize that this isn't just like a piece of history. This is like officially a piece of presidential U.S. history. That Donald J. Trump posted a picture of him with, once again, AI generated world leaders and the U.S. taking over Canada, Greenland, and Venezuela. Like, dude, that's what's going on over the weekend. Absolutely insane. So as I have already alluded to, our particular version of the simulation is absolutely wild. And the equity markets at first not responding too well. The SPY is currently down 1.5%. The Nasdaq is down 1.8%. The Russell's down 1.9%. Bitcoin is down to 91,000. Volatility is up 8%, trading at 20. And then if you look at precious metals, gold is at a new all-time high and silver is at a new all-time high. So gold's up 3% and silver's up 7.5%. So what are we seeing? We're seeing an exodus from risk-on plays such as equities and Bitcoin into quote-unquote safe haven assets such as gold and silver, as we're also seeing volatility spike. So that's, if we were to summarize what that means for an economic market impact, well, that's obviously where we are at. So this is all because of the return of the Tariff King. Trump doubles down on Greenland ahead of Davos arrival. So as we are speaking right now, my producer is telling me actually that Besant is currently speaking at Davos. So we might be circling back to that. But remember, this is all really related to the fact that Trump and the Trump administration and many people within, I guess, politics currently want to control Greenland for security's sakes. Now, does Greenland, the land itself, really matter that much? Maybe it does. You could argue for a base, but it's more so because of the waterways as it relates to both Russia and China. So kind of this concept of Trump's opinion, and I'm not saying this is right or wrong. This is literally just what he has said. He's like, if we are the world's security, if NATO is always relying on us for security, and we see this as one of the major security things that we have to be considering and defending, why should we not then control the region? Especially because, remember, Greenland isn't really its own place. Like, technically it is, but it's also kind of technically owned by Denmark, but it kind of does its own thing. So it's like in this awkward in between. So that's really in a nutshell what this is all around. But anyway, he just got to Davos. Remember, that's when all the richest people of the world decide to meet up and decide how they're going to control humanity. Davos is in play right now. Where's the volume?
They have to have this. Look, we have to have it. They have to have this done. They can protect it. Denmark, they're wonderful people. And I know the leaders, they're very good people, but they don't even go there. And, you know, because a boat went there 500 years ago and then left, that doesn't give you title to property. NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
You heard it there. It's going to be a very interesting Davos. I will be covering this multiple times throughout the day, but I need you to know Trump is not speaking at Davos today. He's speaking tomorrow, 8:30 a.m. ET. Of course, we will be streaming it. We're going to have an early show tomorrow because we're expecting a lot of quote unquote fireworks. So once again, Trump is in Davos, not speaking today, Tuesday. He is speaking tomorrow, Wednesday, 8:30 a.m. ET. So if you're on the West Coast, you're going to be getting up very, very early. At least have your coffee rocking by 5:30 in the morning. But anyway, the fact that Trump is currently not getting what he wants as it relates to Greenland caused him to pop off late last week. And the summary is right here. Therefore, it is imperative that in order to protect global peace and security, strong measures be taken so that this potentially perilous situation end quickly and without question. Starting on February 1st, in about 2 weeks, all of the above mentioned countries, there's 8 of them, will be charged a 10% tariff on any and all goods sent to the U.S. On June 1st, basically getting into summer, the tariff will be increased to 25%. So kind of connecting it back to that first thing we saw, the tariff king, the return of the tariff king. This is really, in a nutshell, what's causing the market to get a little bit funky with it. But remember, none of this lives in a vacuum. Trump says 8 European nations face tariffs rising to 25% if Greenland isn't sold to the U.S. Remember, the cost of Greenland, maybe if you guys are curious about it, it's in the realm of $700 billion, billion with a B. I'm not saying trillion, I'm not saying million, I'm saying billion with a B, which is roughly how much Elon Musk is worth. It's roughly 3x the amount of interest we pay on our debt as a country anyway. So in terms of the grand scheme of things, it's actually not that much money. I kind of joked about it 2 to 3 weeks ago. I was like, you know what? If it comes to a vote, I feel like we can pay off the voting 50,000 people in Greenland. That's how many people are in Greenland. It's even though the land mass itself is very vast, it is not populated at all. There's 50,000 of them. It is far, far smaller than all urban areas within the U.S. at all. It's actually very, very small. But anyway, when you start to do things like this, like I said, doesn't live in a vacuum, doesn't make everyone too happy. Europe contends with a big new threat, the U.S., as Trump threatens NATO allies, tries to head off costly divorce. So the continent trying to see what's going on there, and they're already swinging back. Europe weighs using a trade bazooka against the U.S. as Greenland crisis deepens. That bazooka worth about 93 billion fake whatever their dollars are. EU eyes tariffs on 93 billion of U.S. goods over threat.
Exactly has been threatened by President Trump and how European leaders have so far reacted.
Yeah, Tom, that was a deep inhale there from you, and I can understand because if you blinked, you basically could have missed what happened last Saturday night over the weekend when we heard from President Trump, and just detailing precisely what Trump has now done here. He's taken to target those 8 European countries, most of whom have basically sent some kind of military delegation to Greenland. We should say a very symbolic military delegation. We're talking about rather fewer than 40 or 50 soldiers overall, saying that basically all of you are basically contravening my effort to take over Greenland. So these 8 nations, which are Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland, will all face 10% tariffs beginning February the 1st for their contribution to basically solidarity with Greenland, and that will ramp up on June the 1st to a 25% tariff. And now everything that we've heard from European leaders so far out on Twitter, the comments that have been made elsewhere, has been in total unity with Greenland. We also heard from the European Council President, Antonio Costa, who convened an emergency meeting of EU leaders here in Brussels on Thursday, saying that there is unity on the principles of international law, territorial integrity, unity in support and solidarity with Denmark and Greenland, readiness to defend themselves against any form of coercion, and of course, readiness to continue to engage constructively with the U.S. on all issues of common interest. So that emergency meeting will be taking place here in Brussels on Thursday, convening all of these European leaders to try to figure out what their collective response would be. We should say that in the last hour, we have also heard from Donald Trump out on Truth Social, saying that NATO has been telling Denmark for 20 years that you have to get ready for the Russian threat away from Greenland. Unfortunately, Denmark has been unable to do anything about it. Now it is time, and it will be done. So Donald Trump really ramping it up over the last hour. We've also heard now from the last few minutes from the Swedish Prime Minister says that we will not be blackmailed. Only Denmark and Greenland will decide matters concerning Denmark and Greenland. I will always stand for my country and for our allied neighbors. The EU will stand firm.
That's a good point to pause it right there. As you can imagine, many EU leaders and prominent figures not wanting this to happen. Honestly, I'm not hearing the best of reasoning on either side, but it is obviously quite a bit of drama. The fact that this is all happening with Davos and the World Economic Forum all going down this week, and they're all there. Probably a lot of awkward situations, probably a lot of tense situations. What I would pay to be a fly on the wall. I mean, we're literally at the point where it's like a high school breakup. Trump is literally like leaking his own text messages with the presidents of other countries. He's like, yo, see what this guy, like, literally, he's like just screenshot it and saying, hey, this is what people are saying to me. Fascinating timeline we live in. Truly fascinating. Trump threatens 200% tariff on French wines as Macron reportedly snubs Board of Peace. So this is another thing that's being created, a Board of Peace in a weird way. It's almost like Trump's, I guess, competition to NATO. It's $1 billion to buy in. He even offered, he told Russia, Vlad to like join Putin. Putin to join. This is wild. So this is a whole nother thing. But the fact that France doesn't want to be in there, he's, I guess, going to be tariffing their wine. And of course, it didn't stop there. Act of great stupidity. Trump launches another tirade against NATO ally. This time it's the UK. So he's not holding back these punches. Not holding back these punches whatsoever. All of this is obviously very chaotic. As I showed you, we have volatility spiking, equities going down, and there's a flight to safe haven assets such as gold and silver. Gold and silver surge to fresh highs as investors digest Trump's push for Greenland and flock to safer assets. So this is the daily chart. You could see gold ripping to a new all-time high, silver also ripping to a new all-time high. How's copper looking these days? Copper did hit an all-time high. I believe that was it, but I don't have the full chart there. Palladium futures. How's palladium? Palladium hit an all-time high. Nope, that is nowhere close to an all-time high. So even though a lot of these commodities, these metals are going up, it is specifically silver and gold hitting new record highs. But in general, commodities are clearly ripping with this, as you have bonds taking actually a pretty considerable hit. So you have yield spiking, bonds down. If you look at the dollar, this is a comparison of the dollar against other world currencies, mainly the euro, but you have the yen in there and the pound. So on a relative basis, the US dollar is taking a hit, obviously, as yields are going up. And then uniquely, overnight, if you look at the USD JPY pairing, this is kind of interesting right here. You actually have quite a bit of strength in the differential between, once again, just the USD compared to the yen. So a lot of interesting movement kind of in the global scale because of all of this. And it's going to get even more chaotic as the week plays out. So the market was closed yesterday in observation of MLK Day. The futures market was open for half a day, but the equities market was closed. But of course, larger global markets were open because other countries don't care about MLK Day. That means we fast forward to today, where nothing is on the schedule, but we have a lot going down because the Supreme Court might be telling us what's going on with the Trump tariffs today. Now, this is going to be potentially the third time that they just kind of blue ball us on it. And they're like, hey, we might tell you at 10. The way the Supreme Court functions, which I did not know this before this entire debacle. So if you didn't know it, hey, I don't blame you. But they kind of tell us that they're going to be giving us decisions, but they don't tell you what particular cases they're going to be giving decisions on. So what we know is that at 10 a.m. today, 10 a.m. Eastern, the Supreme Court is going to be giving us decisions. And we know on the docket that at some point they have to tell us about the whole Trump tariff situation and using IEPA. But we don't necessarily know if that's going to be on the docket for today. So what's going to happen is we're all going to be awkwardly waiting around at 10 a.m. once again, like we have for pretty much this entire month, just to find out if we're going to be learning anything. So Today, Tuesday, January the 20th, not only is the market going to be digesting the long weekend, like gap down, the extended weekend gap down, but 30 minutes into the trading session, we might be hearing from the Supreme Court. And then from there, that's going to be leading us to President Trump's speech at Davos tomorrow at 8:30. So as you can imagine, we're kind of hitting the ground running. And then Thursday, GDP and PCE, that's the inflation report. And then on Friday, we're getting some PMI numbers. And then from there, next week, obviously, we're going to be having the FOMC decision. So lots to consider. Trump is going to Davos. Here are the big names who aren't there. Don't really care about that, but this is just a reminder. Trump tomorrow, Wednesday, 8:30 a.m. ET. Of course, we will be streaming it. U.S. President Donald Trump will attend the World Economic Forum in Davos in person for the first time since 2020, bringing with him the largest U.S. delegation yet. I believe as I'm speaking right now, the Treasury Secretary Bessent is speaking there. U.S. Treasury Secretary Bessent issues a warning to Europe regarding Greenland. So this, I think, already took place last night. This is not live.
Again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I'm urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Again, I would say,
so literally reiterating pretty much every speech he had last year, especially in the height of the chaos of the initial tariffs of, hey, don't retaliate because my boss, the president, will retaliate even harder, and he hits back way harder than you could hit back. So he's kind of begging everyone to just like stay calm, don't freak out here. And if you look at the chart, just to be fair here, like I know in moments like this, we kind of all get like maybe a little bit too dialed in. First of all, we're opening up roughly where my cursor is. We're not that far away from the all-time high. Like I said, top right here, this is roughly where we're at right now. Even in all this chaos, it was obviously a buy the dip opportunity. I get it. From February to April, it felt pretty rough. And then from there until now, it was nothing but rip, rip, rip. So please, I understand if you have some short-term trades on that this could be painful. I'm not attempting to downplay that at all. But when you take a breath and take a step back, realize that the market kind of just keeps going up. Yes, there are dips, but any major dip, at least at this point in U.S. stock market history, has kind of proven itself to be a buy the dip opportunity. So please remember that. And obviously, we're going to get big updates on that probably today, but really more so tomorrow, which means the hot news of the day is right here. U.S. Supreme Court announces it may issue at least one tariff ruling on Tuesday, January the 20th. That is today, 10 a.m. Get ready. Supreme Court plans rulings for January 20th with Trump's tariffs still undecided. So if you ask Bessent, he thinks they're going to go in the favor of the administration. Supreme Court unlikely to overturn Trump tariffs. His signature economic policy, according to the Treasury Secretary. He's saying that because he's a part of the administration. But if you look at people actually placing bets, no. Supreme Court rules in favor of Trump tariffs, 28% chance, as in there's a 72% chance that they're ruled to be illegal. Now, that doesn't mean that tariffs or duties themselves are illegal. It's more of how he put them into effect via IEEPA. So if you want to look into it, have at it. The legal question here is the fact that if you look into that particular rule, IEEPA, and the powers that it gives the executive branch, taxes and duties actually aren't called out at all. Like it's not written into it. And that's exactly why the Supreme Court is, I guess, giving their opinion on it, which once again, we should be finding out in about 30 minutes, or at least we might be. Supreme Court will decide if Fed independence has any legal teeth. So Supreme Court, completely different issue, this time related to Lisa Cook. Wednesday's arguments in the Lisa Cook case come amid a broader Trump campaign to bend the central bank to the presidential will. So Lisa Cook, currently a Fed governor, the whole like craziness with like, did she lie on her mortgage application? Should she be a Fed governor? Can Trump even just randomly fire her? He did months ago say, hey, you're fired. And everyone's like, can you actually even do that? So that's going to be heard starting tomorrow as well. And just so you know, I guess Fed Chair Powell is going to be there, so there might be some news from that whole standpoint. Bessent says Fed Chair pick could come as soon as next week. So with all the craziness of Powell and Cook, we might be finding out that Kevin Warsh is going to be the next Fed chair. Right now, for the longest time, it was Kevin Hassett. He's not even on the list anymore. Kevin Hassett is a part of the administration. He's the director of the National Economic Council, the NEC, the NEC. But as you could see over the past, for the longest time, he was the leading guy. And now over the past couple weeks, Kevin Warsh, there's a 61% chance. And there's a new guy, Rick Ryder, and then Christopher Waller are the top three. But at this point in time, according to Kohrs at least, Kevin Warsh is considered to be the next guy. If you haven't already, sign up for the newsletter. It is 100% free, has always been free, always will be free. Every single Sunday to your email inbox, you get a breakdown of the market, cheat sheet for all the earnings. These are the earnings getting rocking. You might care about Netflix after the market closes today. Tomorrow we have Johnson & Johnson. A little bit later on this week, P&G, Intel, Capital One. I would argue that the main one of the week is probably Netflix, maybe even J&J tomorrow. So I'll be paying attention to those too. But we are in earnings season. Obviously, lots of major macroeconomic events throughout the week. Today's a little bit more quiet. I am waiting for the Supreme Court at 10 a.m. Trump is speaking tomorrow. And then later on this week, we get a lot of major macroeconomic events. And with respect to seasonality, over the past 27 years, today has been neutral. Tomorrow is leaning bullish. Thursday is a bit more neutral. And then Friday's also leaning bullish. And this time around, does seasonality matter? I have no idea. I'm just too enamored with the fact that we are looking at the president of the United States literally trolling the entire world. So folks, that's your setup on the day. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. Remember, folks, it's just money. You can't take it with you when you go. I'm a little afraid to look at my own position, so we're going to see how this plays out. Of course, I have not made any trades yet. I did a little scalp trade yesterday just to getting a trading day on Apex and Take Profit and Lucid and FFN and all those guys. So I'm just waiting. I don't need to do anything too crazy here. Here's where I see all the key levels of the day. If you care at all, this is the S&P 500. As you can see, we had a pretty solid gap down of about 1.3%. The closing value on Friday was all the way up here at 6,925. We are currently trading at 6,846. So that is a sizable dump. We are at a very key level right now here of 850. It's this positive gamma node over here on the left middle portion of your screen. You could see a lot of structuring was at every $25 rung. We have people at 850, 875, 6,900. And then to the south side, 825, 6,800, 6,775. So all the big players, they basically have one position or another at every 25-point increment, which on the SPY is about $2.5. But it's easier and a little bit more lucid when you're looking at the SPX levels. So once again, we're right now battling it out at 50. I would say that the bull camp is on warning the longer we stay below 6,900. And if we break 6,775, I strongly believe the odds greatly increase of us going to 6,700. So I just want to be clear, because there's probably people joining in right now, and I understand that as soon as you see these types of gap downs, people get emotional, this, that, the other thing. I want to make something very, very clear here. Just because we're down by 1 or 2% in a day, that is not a reason to be bearish. Just the same way if we go up 1 or 2% in a day, it's not necessarily a reason to be bullish. You have to consider the other things going on. And right now, you just have to admit that because we have this overnight movement, for all we know, people might just decide to buy right here. We have this recent low from January, basically the first trading day of the year. What was this low? Hang on. I want to mark this out because this could be interesting. Right there, 6824. That might be a double bottom situation. People might be buying it off the 50 EMA. They might want to shoot it up and get this upside gap fill. Those are all in the bull case scenarios. That's completely possible. On the other side, we might break the 50 EMA. We might break this low. We might not hold the support at 6,800, and we could be puking all the way into the low 6,700 and kind of going for this low that we saw in mid-December. That is also possible. My point in saying this, and this might sound like kind of a no-brainer, be like, wait, so you're saying the market could go up, it could go down, that's so useful. No, hang on, just hear me out on this. The name of the game is to have no bias. It's to pay attention to these key levels and look at that big money positioning and see if you can catch the new trend. Anyone in this world who's saying, oh, I know the new trend, I know what's happening, they don't know shit. You have to be humble enough to understand you don't know what the big players are about to do, which means that this game is a lot more about reaction than it is prediction. If you are sitting here predicting that, nope, I'm buying the dip right now, this is the low. Well, maybe you're right. The chances of you being right are wrong. Or maybe the other side. Nope, this is the high. I'm going short. Maybe you're right. I have no idea. But you know what's easier is saying, okay, these are the key levels. I know where big money's positioned at. I can track flow, and maybe all of a sudden at these key levels, you can see strong bullish flow, strong bearish flow. Maybe you can get in with minimal risk and identify the new trend and ride it. So I think one of the most difficult things for retail traders, especially active retail traders, is kind of having that humility and being humble enough to recognize we have no idea where the market is about to go. That is very, very important. I get it. I understand that people are emotional right now. They're seeing gap downs, they're seeing red, but I can show you many, many pieces of information where we've gotten hit, such as Friday the 10th, and right away we bounce back. We got hit on Thursday the 20th, right away we bounce back. We got hit on Wednesday, December the 17th, right away we bounce back. I could also show you other examples where we got hit and it got worse, such as July 31st to August 1st, such as April 3rd to April 4th. Like, you can find all these examples and counterexamples to support whatever bias you have. So if you're saying, well, no, the last time the dip was bought, yeah, I could find examples of that. Or you could find examples of like, that one time when Trump was talking about tariffs, we sold off and the next day it got even worse. Yes, I can also find examples of that. So just because you can find certain examples, that does not mean that is the rule. It might be the rule, it might be the exception to the rule, but what this is always going to boil down to is, do you have good risk management? Truly. Honestly, even beyond like your entry technique, this or that, it's, are you playing with the appropriate size relative to your account? And when your risk is hit, are you actually getting out of the position? If you can keep those two things in control, and really they're just two things that are basically saying the same thing. Obviously, your sizing is your risk and your risk is your sizing relative to where you're going to get out. If you can keep that in control, regardless of the chaos of the day, with volatility being sky high or floor low, whatever the fuck you want to call it, you will be okay. I know many other streamers, content creators, and traders, and things that you have been taught. It's in the realm of no. If you study this, that, the other thing, I'm like, you're going to be able to predict where price is going to go. I'm promising you this. No one can predict where price is going to go. And if someone could, they're not giving that shit out for free, because they would be a billionaire sipping pina coladas on an island, and they definitely wouldn't be fucking telling you. So even if that Holy Grail were to exist, the assumption that you have the Holy Grail, the assumption that I have it, the assumption that that is publicly available, that's just crazy. So let's just work under the premise that no one knows where price is about to go. It's a 50-50 shot in terms of active trading. I'm not really specifically speaking about investing. So in the short term, the name of the game is look at where big players are positioned. See if you can play with the direction of big players with minimal risk, and just stick to your system time and time and time again. That's all we have to do. Let's keep it simple. We don't need to over-engineer it. We don't want to under-engineer it, but just keep your risk in control and you will survive. Coming out of the gate, the Mag 7 did pop for a second. In real time, it's taking a bit of a hit. The S&P 500 is completely flat. So once again, the overall market, the mixture of SPX, SPY, XSP, and ES, basically all the measures of the S&P 500, not doing anything, as we are pinned to this very important key level of 6,850. Hey, I like the higher low. If we break and rally, look at 875. If you're an active trader and you think the dip's about to be bought on this breakout, you can risk this low right here at 936. It's not necessarily my favorite play, but I also don't mind the risk reward at all. You can risk 42, break of 50. You're playing it for 75 and maybe even up to 90 or 900. That's totally possible. I personally would wait for a little bit more confirmation in the Mag 7 flow, because starting at about 5 minutes into the session, people were selling calls. They were getting out of their bullish positions. So I would wait for this to stabilize a little bit. It's a bit early in the day for me. But once again, like, hey, maybe you love trading early in the day. So I just wanted to point that out, that I'd personally want a little bit more strength there. SPY's holding enough. I mean, from just a pure risk reward perspective, I don't mind that breakout trade. Your risk is right here. I don't know if it's going to go. All I can tell you is you have minimal risk to potentially considerably more reward. On this breakout, on this push of, I don't know, 55, 60, you could just move your stop to break even, and then it's a freebie trade. Like it's really not, we don't have to over engineer it. I think there's a lot of people who, as soon as they put a trade on, they think, this one has to work. We have to hit my profits. I'm not willing to take risk. And you're just opening yourself up for disaster. In my opinion, whether you want to use your stop to break even, whether you want to use a trailing stop loss, whatever it is, it's just once it goes a bit in your favor, take risk off the table. Maybe you're right. Maybe that 50% chance of you being right is right and we rip. And then if you're wrong, whatever. It didn't cost you anything anyway. If your stop's at break even, no sweat off your back. If it's a trailing stop loss, you've probably made some profits anyway. So for me, like, I see in social media way too many people trying to over-engineer it. I'm a little bit freaked out about this because the Mag 7 isn't catching a bid, even though the SPY is going up, but I'm seeing vol die off. This is the volatility of the S&P 500 right here, VIX, volatility of S&P 500 index. That's taking a hit. If we see people start to puke a lot of puts right here, the blue, the dark blue, and the light blue, those are your puts. If we see a lot of people selling their puts, that actually does set up a potential Vanna rally. If you want to look a little bit more up about that, it's VANNA. Vanna is a second order derivative in the world of option Greeks. And basically what it means is when you have vol expand and the market goes down, people are freaking out. And they probably buy puts for protection. However, see, we just took a hit right there. Something just happened. This is why I don't like to necessarily front run it when some of the data doesn't make sense. This whole time when it was going up and I was like, I'm not the biggest fan. Like for me personally, it's because I've seen too many times that when we see weakness over here, it's a little sketchy. Anyway, back to the world of a Vanna rally. Vanna rally, second order derivative related to volatility for options. As volatility expands, people are most likely buying puts for protection. However, if price stabilizes and starts to go up, volatility drops. That means that the market makers who are engaging in all of the, like the buying and the writing and the selling, or excuse me, the writing and the buying of options, they don't have to protect themselves as much. Just like literally the range of possibilities shrinks. So they don't have to protect themselves as much to the downside. So they buy back some of the positions. As you buy back some of the positions, that pushes price up. As that pushes up, a lot of people who got those puts get out. That causes vol to collapse even more. And it becomes like kind of a self-fulfilling prophecy, and all of a sudden the market pops. So once again, that is with respect to a Vanna rally. If you want to look up more about it, VANNA. But there is a unique situation that you need for that to be possible. First of all, you need the market to drop with an expanse in vol. You need people to be in puts, and then all of a sudden you need price to stabilize, vol to drop, and people to get out of those puts. And then that's the situation you need to potentially have a Vanna rally. It kind of only works to the upside. There's really not much like of a sentiment of a Vanna rally pushing it to the downside. There is an options mechanic that can cause the market to puke pretty bad, but that's commonly more so referred to as a gamma rally, which is just another derivative in the world of option trading that I think everyone should be aware of. But just to kind of throw out the different names. So to the downside or to the upside, you could have a gamma rally with a G, but to the upside, when it relates to vol collapsing right here, we're seeing vol go from 20 down to 19. That's more of a Vanna, VANNA. Like I said, if you want to look that up. All right. Well, I haven't done any trades, as you can see right here. This was from yesterday, the scalp trade. I was just trying to get in trade days. It didn't count on FFN, but it did count on all my other accounts. So I still have my 15 big Apex accounts. I have my 5 small Apex accounts. I have 2 FFN evals. I have 3 take profit evals, and I have 1 lucid eval. So 1, 2, 3, 4, 5, 6. So I have 6 evals and 20 funded accounts. That's what I'm currently trading in the world of futures. 20 funded from Apex, 15 are large, 5 are small with respect to their buffer. And then, like I said, I have 6 evals on TPT, Lucid, and FFN. So that's where I'm at. This trade technically was not made today. It was made yesterday, but the way Rhythmic is doing it, it's counting it all together as like today, or it's counting yesterday. It's basically counting the 19th and the 20th as one trading session, but Tradeovate is doing it differently. So, I mean, I put it up on my Twitter. It was just a little scalp trade of about $10. So it is what it is. Oh, what do we have going on? Where's VWAP? VWAP is down here. Okay, so we had kind of 2 VWAP tests already today. If you bought that dip at 67 here on NQ, congrats to you. That was a baller trade. Wow, we are really moving right now. From a technical perspective, I don't mind this trade at all, actually. This little breakout trade. If it happens, I guess we technically just got rejected. I don't mind it. The only thing that I'm a little bit hesitant about right now, is the fact that we might be getting the Supreme Court decision at 10 a.m. today. So for myself, I'm trying to hold the old horses, waiting to see what's going on. My Texas Roadhouse long call is up 70%. Hell yeah, standing red. Texas Roadhouse. Has Matt talked about a massive amount of liquidity the Fed is pumping into the market? I would, but it's actually currently not true. They're not pumping a massive amount of liquidity into the market. They are not. Massive amounts would be more in the realm of like pretty considerable quantitative easing. And they're kind of doing like baby quantitative easing to the point that the Fed's not even calling it quantitative easing. They're somewhat supporting the market, but by no means is it massive. I think you're being a bit dramatic there. If you wanted to know what massive amounts of liquidity is, go look back in 2020, 2021, and you'll have a much better understanding of what massive amounts of liquidity is. They're supporting the market, but it's actually more of like a baby amount. It's not massive by any means. Novice trader went long on SPX. I hope it works for you. I very much do. Here's a look at flow. Mag 7 getting beaten up, but potentially turning at 941. A little bit of an improvement there in the combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. S&P 500. People are selling puts. They might be selling to open a position. They might be selling to lock in their gains from the gap down. But what I can tell you is no one's really touching calls right now. So kind of watching these. Remember, the green and the orange are calls. The green are 0 DTE calls, while the orange is all calls put together. By the way, this that I'm looking at right now is all from SpotGam. If you're interested in SpotGam, it's pinned to the top of chat. It's in the description of the video. You can get 80% off. We are the only community on God's green earth that they give 80% off to. So if you want this fat discount, like I said, pinned to the top of chat in the description of the video, you can see the positioning with this view. This is their gamma map. I like this tool a lot. I also look at the options flow. Obviously, I'm looking at the S&P 500 and the Mag 7, but you can look at individual ones as well. AMD popped, it's selling off. Apple is actually going up. Broadcom is going down. Coinbase did get hit. It's recovering. Microsoft got hit. MicroStrategy getting hit. Meta going flat. Netflix popping a little bit up into their earnings after market closes today. Nvidia slightly down. Oracle slightly down. Palantir slightly up. Tesla slightly down. And Google was up, giving it back. So I'm not really seeing strong trends in any direction, but really I just wanted to go through that to show you that this tool suite is absolutely amazing. I could not imagine trading without it. For example, right here, I could tell you that there's massive support at 6,800. There is seemingly a put credit spread at 95, spread by 90. There's more support at 800. I'm seeing this positive gamma node over here. So if we were to sell, I would fully expect support to be found. If the market continues to the upside, I would expect resistance to be found at 6,900 because that's the next positive gamma node. Remember, positive gamma is not bullish or bearish. It is just sticky price action. That's where if we get to that zone, you expect price action to slow down, while the red zones are negative gamma, which is more of slippery price action. So whichever way you're going, just expect a little bit more volatility within that direction until you kind of bounce into another aspect of negative, or excuse me, positive gamma. So the red is negative, the purple is positive. Positive is not bullish or bearish. Same with negative. It's just sticky price action versus slippery price action. So I could pretty confidently tell you between 6.880 and 6.8 like 15, we could just be whipping around today within that zone. We could definitely be whipping around in that day, in that zone. We will have 0 DTs 3 days a week, Monday, Wednesday, Friday on Mag 7 plus Avago and IBIT starting next week. Yes. So I was going to kind of do like a specialty video on that. And on top of that, I think there's actually some financial plays in there, Profit, as well. I thought they put, was it XLF and some of the major financial plays? But yeah, once again, the world of options is becoming so popular that we are getting even more 0 DTEs. So right now, if you look at European style options, SPX, NDX, RTY, VIX, like those types, they have 0 DTs. Every single day of the week, you can find something that's going to expire that day. With respect to these American styles, such as Tesla, Apple, Nvidia, like basically any stock you can think of, they only expire on Friday. So if it's a Friday, yeah, it's a 0 DT. But other than that, the closest one is the next Friday. For some of the most popular names, that's actually about to change. And we're going to get expirations on Monday, Wednesday, Friday, I believe, excluding earnings. They're going to skip those, but the point is we're going to have even more expirations. So kind of some wild stuff going on, like truly wild stuff going on. Folks, we are about 10 minutes out. I haven't really done anything today. I'm doing my best to be patient because we might be finding out about the Supreme Court decision on the legality of Trump tariffs today. So I'm using everything, I don't know, all the internal discipline I can possibly find to wait for this 10 a.m. announcement. And then from there, who knows what in the world's going to be going on at Davos today. I should probably reload this because we don't know. Hopefully they bring on our boy Rick Santilli. This is Sell America. U.S. dollar treasury prices sink and gold spikes as globe flees U.S. assets. Well, we're going to be finding out. Tech stocks lead Wall Street sell-off as tensions over Greenland escalate. Trump is showing the U.S. is back. Scott Bessent tells CNBC as Greenland tensions ratchet up. All right. Well, this volatility, this craziness is not going to be disappearing at all this week. Not at all. I'm watching volatility in the top right. I'm watching silver in the bottom right. I know many of you are trading that right now. It did hit a new all-time high with gold. Vol, actually, if we look at the daily chart, here's a look at VIX, just a spike there. But remember, in the past, it spikes. It can hang out there for a little bit, gets hit. It can spike. It can hang out there for a little bit. It gets hit. I'm expecting this time to be no different. Even if we spike, maybe it's just a day, maybe it's a week or two, and I expect it to come right back down because that's exactly how volatility has played out in the past. And I, for no real good reason, think this time is going to be any different. So just want to be very, very specifically clear on that. You know what I didn't do today, which I very much should do, is mark out the session high and low right here. This is for NQ, just in case I get trading on all those SIMDA funded accounts at some point today. I just want to know if we break it. This is the overnight trading session high around 25,475. The low is closer to 25,100. Once again, this is for the NQ. And it looks like we're getting a little bit of a pop, a little bit of excitement heading into, we're 9 minutes out, folks. 9 minutes out from this potential Supreme Court decision. Potential. France's president on speaking to President Trump. I do not intend to speak to President Trump at Davos. Just an hour ago, President Trump posted a screenshot of a text message from Macron asking to meet in Davos. Dude, these guys, it is like literally middle school drama. What is this one? What's Scott Bessent saying?
I think what the president wants to talk about, what I want to talk about, is that this is the 1 year anniversary of the president taking office. We have the strongest economy in the world. We have the strongest military in the world. And the U.S. is back, and this is what U.S. leadership looks like.
Before the president ever rests on his laurels, and many times he's moving on to the next thing. And what I was leading to is I don't think it's a quid pro quo with Norway. I think he's saying, look, I've had 8 peace deals. I've settled them all through peace. This is essential for security for both the world, for the United States, for Greenland, for Denmark, for Europe. And one way or another, we got to get to where we're going. And I think that was what his point was. Do you agree with that?
100%. 100%. I think it's a complete canard. And if, like,
a canard.
There's any kind
That's
of
a good
equivalent
SAT word
with
of
the
the
Nobel
day.
Prize.
Canard.
This has been on the president's mind since his first term. It's been on the presidential mind for 150, 160 years. The U.S. has been trying to acquire Greenland. This is not something new, Joe.
And things like this happen all the time. It's happening right now with Diego Garcia in
Canard,
Mauritius.
an
and
unfounded
the UK.
rumor or story.
Territories change. And Denmark is not really in a position to defend Greenland. We fund NATO, most of NATO, so we're already defending it.
So, Joe, since
Such a
1980,
canard.
the U.S. has spent
such a
22
canard.
trillion more on defense than the rest of NATO has. 22 trillion. That is approximately 2/3 of our outstanding government debt. So while the Europeans were building schools, having health care, we have been defending the world, and I think the president believes they should be paying their fair share, and he is trying to get in front of this. He's trying to get in front of it because Greenland is strategically important. It's strategically important for his Golden Dome project to protect the U.S., and he's invited
I'm liking
Canada
this 30-minute
into that. They want to
strength
pay their
on
share.
NQ and ES
it
in
is
the bottom
important
left of your
that
screen.
the U.S.
Look
has
at that potential
control
breakout.
of
5-minute,
Greenland,
10-minute bullish,
and that will
5-minute,
stop
10-minute
any
bullish.
kind of a kinetic
I'm watching
war.
for
So why
word.
not preempt the problem?
That's another
before it
10
starts?
points. That's about a buck
And
in the
likely,
SPY.
in your view, it
So
would end in some type of
83.50 it could be a
diplomatic,
legit breakout in the S&P
event, not
500.
a-
Vol is not
something more
calming
serious.
down
I
quite
think
yet.
that's
Vol
the
is
worst
staying
case scenario.
pinned
The
to
president always
1960.
talks on the front end, shock and awe, I think, and doesn't take anything off the table, working on the negotiations.
This
on
guy
the
is
back end,
canarded.
or as a prelude to that.
Well, look, I think the president should take.
Just so you guys know, we are 5 minutes out from a potential Supreme Court decision. I'm saying potential because the last 2 times we were supposed to find out about this, they just decided to not give us their opinion on the Trump tariff situation using IEPA. This is just the way the Supreme Court works, apparently. So we know we are getting something from the Supreme Court today. We just have no idea if it's going to relate to the Trump tariff situation. Some people are saying this time it's going to be different, but I wouldn't necessarily hold my breath on that. But once again, 5-minute warning, 10 a.m. Eastern. We're going to be finding out.
Critical minerals. So we had our G7 partners, Mexico, India,
Mag
South
7
Korea,
still getting beaten
and
up.
Australia there.
S&P
and this is what
500
U.S.
still getting
leadership
beaten
looks
up.
like, Joe.
Canard. The word of the day. A rumor or unsubstantiated story. A canard. We cannot believe this canard. All right, we're all awkwardly waiting. What are they doing at Davos right now? Anything? Awaiting Supreme Court opinions. All right, what's old Kramer have to say here?
Netflix shares up about 1.2%.
Options market not looking the best at the moment, but last Supreme Court decision, this is how it went, and then it popped right after.
Likely will, but we'll see. Meet them right now to continue to secure the deal it has, which is now all cash, $27.75.
David Zaslav, CEO.
They're talking about Netflix. Netflix reports after the market closes today. Shout out to Spotgamma. Netflix, the implied move is 6.6%.
What do they do?
So once again, the implied move from earnings today on NFLX is 6.6%. United Airlines is also 6.3%, coming out after the market closes today. Interactive Brokers, 5%.
That they will come back. Nothing says Netflix.
Those are the major ones for the day.
And again, like the domestics, like Walmart being up, that's a sign that people want to bring their money back to obviously domestic stocks.
Okay. Jim,
we're getting into the final minutes here.
It's hard. It's hard.
We're getting into the final minutes.
Supreme Court opinion coming up. Don't go anywhere. Maybe.
Yep, we're just dancing around 50. The question is, why are we dancing around 50? Well, every $50 rung is commonly just a psychological level. As you can see from the positioning, people are at the 50, the 75, 6,900. They're at the 825. They're at the 6,800. This is kind of one of the most interesting positions to me of the day. There's a very large put credit spread, which is an overbet. For those of you Let's say you're paying attention to football over the weekend. You might have bet on the over on the game, the total score, maybe one individual team or maybe one individual half. But if you understand in the world of sports betting, the concept of an over bet of like, hey, we just need it to be above this value. We don't care if it's by 1 point or by a gazillion points. If you understand the concept of an over bet in the world of sports betting, you then understand the concept of a put credit spread. This right here, this structure where it's, am I blocking it? I'm sorry. Over here. This structure right here. The big purple to the right and then the big red to the left. This is called a put credit spread. So it's the same thing. It's an overbet. Basically out there, someone to the tune of 8.4 thousand contracts, which is an 89 percentile play, is saying that we will be ending the day. 4 p.m. will hit. And we will be ending the day above 6,795. They don't care if it's by a cent or by 100 points. Once again, it's an over bet. Either we're above or we're not. It doesn't matter by how much. This bet will pay if above, and it will not pay if below. So once again, if you understand the world of sports betting, this is the biggest bet I see on the chart right now for a 0 DTE perspective, 0 days till expiration, as in the bet ends today, 4 p.m. Eastern today. The biggest bet I am seeing is that we will be concluding above 6,795. Now, just because it's the biggest bet, does that mean that they're right? No, we've streamed days where we've seen the biggest bet of the day get completely blown out. In fact, sometimes it's a disadvantage to be the biggest bet of the day because that might mean you're a target. And that means that maybe, like the way we're looking at it, that maybe people are intentionally targeting you. That is 100% possible. So I just wanted to get that on your radar before we get into this potential Supreme Court decision, which we are less than a minute away from. So going into it, we're pinned to a key level, about 50 points, about $5 on the SPY, but 50 points on SPX above where that put credit spread is. But let's see. I'm seeing a little bit of optimism going into it. I'm seeing some higher highs, higher lows, obviously on the intraday trend. By definition, that is bullish. And we should be finding out in about 40 seconds. I do have the volume on if they start talking. And then other than that, I have all of my other news sources over here. So I'm going to be trying to spot this news as quickly as I can. But I have a feeling before I can even read the news that the market's going to be telling us what's what and who's who. And it should be going down right about now. So let's find out. Initial reaction is to the downside. I highly doubt the news is out. All right. Buckle up, Buttercup.
Good Tuesday morning and welcome to Squawk on the Street. I'm Sarah Eisen, joining today from the World Economic Forum in Davos, Switzerland, along with David Faber. As always, Mike Santoli today live from the New York Stock Exchange. We're following a number of breaking stories this hour, including an early sell-off
Where's the Supreme Court?
Trump's tariff threats.
Come on.
Around Greenland. It's what everybody's talking about
I'm not
here.
seeing
and
anything
the key
yet.
Tariff decision
as soon as
in the Supreme Court that could come this hour. We'll bring you the headlines as soon as we get them.
I'm waiting. We're waiting. Last time it took about 5 to 10 minutes to realize that they were not reporting it that day.
CEO Mark Benioff, Micron CEO Sanjay Mehrotra. For now, David, back over to you.
Okay, yes, Sarah, we're going to start with tariffs. Of course, that threat of a new round of levies because of Greenland, essentially. The fact that the president wants the U.S.
A little bit of a hit there,
so to speak. We
might have a double bottom, a triple bottom situation here at 840.
And Eamon Javers has all of
Mag
it.
7 is getting hit. S&P 500
David, a lot
is
at
getting
stake here.
hit.
Just in the next couple of minutes, it's 10 a.m. on the East Coast, which means that we are in Supreme Court decision time.
Come on,
we're going
what's
to
it
watch
gonna
for the
be?
Supreme Court.
What's
we don't
it gonna
know exactly
be?
how many decisions, whether we're going to get the tariff decision. That is a possibility over the next couple of moments. So we're watching for that in real time. Meanwhile, we saw the
volatility is picking up, and silver is once again spiking.
That led to the open that we're seeing now. Take a look at what the president posted on social media in part. This is a response by the president to European countries which put forces in Greenland over the weekend.
I'm not seeing anything yet. I have all my news feeds up. I'm just waiting, trying to get it to you as quickly as I possibly can.
10% tariff on all goods
Nothing
from the
yet.
countries that
Nothing
have sent troops
yet.
to Greenland.
Nothing yet.
On June 1st, he said that will increase to 25%. He said that tariff will be in place until a deal is reached to purchase Greenland. And here's what he said on social media in terms of explaining his reasoning for this.
Yet.
He says, we have subsidized Denmark and all of the countries of the European Union and others for many years by not charging them tariffs or any other form of remuneration.
Mag 7 still
Now,
getting hit.
after
SPY still getting
centuries,
hit. Flow
it is
alert
time
coming
for
in.
Denmark
That
to
might be
give
the
back.
reversal. Let's
World
see.
peace is at stake, says
Let's
the president
see.
over the weekend. So what the president is doing here is saying that if those European countries insist on putting troops in Greenland to protect it from a potential
Nothing yet.
U.S. military invasion, then he will
Come
impose
on,
these
tell us.
tariffs as of February 1st, and then kicking into a higher level.
Ruth would be
in June of
rolling
this year.
in her
All of
grave
that
if she
said,
knew it took
David,
this
it's
long.
important to put this in some context. We saw the president threatening tariffs last week. Remember, he threatened tariffs on trading partners of Iran, including, of course, China, which is a big one. That threat came on Monday. The president said a couple of times during the course of the week last week that those tariffs
down,
were in effect.
NQs at
However,
VWAP.
we have not seen any tariffs
Awkward in
noticed
between right
to the
now.
Federal Register over the course of the past week from his threat last week. So as far as we can tell, David, nobody is collecting those trading partner tariffs on Iran that the president threatened last week, even though he says those are in effect.
We're
Is
at
that going to be the
VWAP
case
right
with
now
this threat?
on NQ.
We just don't know. We'll wait and see, and we'll wait and see for that Supreme Court decision.
Right. And if recent history holds, we'll be talking to you soon about whether or not we're getting that decision.
Still nothing.
And if we do, of course, what it is. Eamon Javers, thank you.
You bet.
In Washington. Let me turn to you, Mike Santoli, of course, with a sell-off in place of almost 1.5%
Flow alert
now
just
on the
hit at
S&P. Give me your
10:02.
thoughts
We
this
might be
morning.
getting another classic 10 a.m.
Directionally very
reversal.
clear. Sell stocks, sell treasuries, and affect
Mag
bonds
7 still
globally,
getting
sell the
hit.
dollar. It's a mini version of what we got
NASDAQ
last April.
is also
very,
getting
very,
hit.
miniature version.
Much
of that.
milder, right.
Much milder, and I do think everyone is at least sitting there reserving the possibility that we do get a bit of a de-escalation and a walk back. But I think it's relevant that the market itself, the setup, was for an extremely clean 2026, where the economy was going to reaccelerate, the Fed could cut, where tariffs were last year's issue,
Still
and
drifting.
therefore you want to buy cyclicals.
SPY starting to pick up. This flow alert hit at 10:02.
That just
must
means we're
have been
kind of
the end
building
of
in a
this
little bit
selling.
more of a what-if premium into
not really.
stock prices.
Just calls
we
are
came in
flat
with
right now.
valuations
No
at
one's
peaks.
getting into calls quite yet.
Dispersion
So for
really
me, I'm
high,
holding my
basically.
horses
Like
on
nobody
going
thought
bullish.
There was a lot of macro
We also
risk.
don't have
You
the Supreme
obviously
Court
had corporate
decision.
credit spreads at lows, volatility at lows.
While we're waiting for the results to come out, I do want to remind you, the last two times that we were expecting the Supreme Court decision and they decided to delay it, the market did pop. But that's only 2 data points for you.
And then have a wait and see moment. So far, nothing's breaking loose. The Japanese
We're just
bond
waiting.
yield
But
story is a
VIX is
wild card
climbing
here.
right here.
That was
Vol
overnight.
is still
That was the
climbing.
exacerbating
Interesting.
factor that got
Vol
us from
is
a
up,
1%
but the
decline in
market's trying to pop a
to
little.
1.5%. And
Interesting.
you do have Treasury yields going into the zone where
Interesting,
people thought maybe it's going to present a bit of a
interesting.
headwind for the economy and the
Nothing
markets,
yet.
and of course housing activity. So that's where we sit right now.
All right.
Gold and silver.
We're about 5
remain
minutes
the
past the
only
hour, which means we should be finding out
escape
any
valve
second
for a
now.
lot of this
Hold up about
pressure.
three.
We should be finding
Bitcoin
out
is broken.
any
Bitcoin is kind
second.
of broken, yeah. Strangely, and
At
silver,
least
of
as far
course,
as this roll,
Come
right, it's
on.
broken.
which you would expect
Come
somehow that it would be
on.
trading in more in line with gold, right?
It's kind of a risk asset. It hasn't been coupled with gold for really a while now, really since October.
Yeah.
So we'll see if that remains the case. And so basically, it's the same trends from before, where gold and silver just get this accelerant.
But the market being reminded of potential unpredictability, certainly when it comes to the
Nothing yet.
president. Sarah?
Sarah,
okay, David, well, the
tell us the
financials are joining the
truth.
sell-off this morning, as well as President Trump's Greenland
Little bit
tariff
of a
threats
pop
rattle
here.
the markets. Joining me now, first on CNBC, to kick off our Davos coverage here on Squawk on the Street, Citigroup Chair
Third,
and
fourth
CEO
VWAP
Jane
bounce of the
Fraser.
day.
Welcome.
Bounce, bounce,
lovely to be
bounce,
back with you
bounce.
again.
It's lovely to be back with you again in Davos, and on such a big market day as well. Down 1.5% on stocks, treasuries, as Mike was saying, selling off, the dollar selling off. Concerns about these Greenland threats. What do you make of it?
Well, there are certainly plenty of headlines today, and it's always important to cut through some of the noise. It's not unexpected that the markets would be selling off at the moment, but I think there's a couple of things. First of all, I think many of us in the corporate world do have some
back
confidence
down to
that when the government
VWAP,
leaders do engage, which they
smacked
will,
right at the
the
EMA
allies
cloud.
will come
This
to
is
some
NQ,
form
the
of
NASDAQ.
resolution.
You expect
May take a
VWAP is
a lot
here
of them are
at
going to be here in Davos.
277.
Trump is coming tomorrow. Macron is here. I just passed his massive entourage.
We're
I don't
picking
know.
up a little bit.
There's a headline that he's
Did
not going
it
to be
get
meeting
officially
with Trump.
delayed again? I'm seeing some
What are your
buying come in.
expectations at this point?
My expectations that over the next few days there'll be plenty of dialogue, plenty of engagement.
The price is
And I
looking
think
like the
that's what
last couple
business
times it got
community will be
delayed.
looking to, because when you step back, there is a general sense of optimism. I think the growth, the world is in a pretty good place at the moment. The US is operating from a position of strength. We've got consumer spending looking good over the holiday season. We've got the big, beautiful bill going to be delivering some important tax benefits in for the consumer in the spring.
Right back down.
A lot of investment in AI and beyond from the corporate sector. And deregulation is making a difference. So I think when you cut through the noise, there's a lot of areas to be optimistic about 26
maybe starting to improve, or it could just be a little fake out here.
Mostly on the geopolitical
S&P 500 people were buying calls and literally just dumped them,
should
like in real time.
Sort of
you can see the delta dropping right there.
Venezuela,
now we're
Iran,
bouncing all over the place.
Now Greenland, and potentially more tariffs.
So the market's been able to see through some of the noise. And
no
really
clear trend yet. I don't think there's much of an advantage of placing any trade at this moment in time because the trend's unclear.
Because there's been a lot
here we go.
Hang
on. Shut up. U.S. Supreme Court does not issue ruling in challenge to legality of Trump's global tariffs. So what's that mean? Officially 3 times in a row, they have delayed it. I believe, are we officially, 3? What? I thought I was over here. My bad. This one. I was showing you this of we're just going to VWAP. But anyway, the major news as of right now, it's currently being reported that once again, there is no ruling. They are punting it again. There's no ruling again. We are, I guess, still in this weird purgatory. That's the 3rd time, or is it the 4th time? I believe it's the 3rd time. And this has all kind of got rocking ever since the start of January. Is it the 3rd or the 4th? Is it the 3rd or the 4th? Can someone fact check me on this one? It's at least the 3rd, but it might be the 4th. But anyway, officially, we were waiting today, and we're not getting it again. I'm sorry, folks. This might surprise you. I know if you clicked on this video looking at the thumbnail, you might be like, hey, that good-looking guy is probably a member of the Supreme Court. He looks like a Supreme Court justice. I get it. There's a lot of confusion going on. AI gets crazy, but I am, in fact, not a member of the Supreme Court. I am not a justice. They did not ask me for my opinion, and if I were there, I would be like, hey, guys, let's give our thoughts. Let's live stream this thing. And I understand that you might want to be taking your anger out on me. I understand this concept of let's shoot the messenger because you're angry. But I just want to remind you, that's all I am. I am just the messenger. I did not vote to get this out. I didn't vote to delay it. They didn't ask me for my opinion. All I can tell you is, once again, we did not get it. 3rd time in a row now it's been delayed, which means at this point it's probably going to get punted to next week, which is really going to ratchet up some of the volatility because next week is also an FOMC decision, a Federal Open Market Committee, where they're most likely going to decide to not raise interest rates. So that's going to make that whole situation a little bit crazy. On the instant that this was announced, we did get a 1-minute pop here at 10:06, and then leading into the next minute, it did start to trend down. Vol is still climbing. As this goes up, probably not the most bullish sentiment for the SPY on an intraday basis. So I am watching the VIX climb and climb and climb, which is causing a potential breakdown on the 5-minute, a potential breakdown on the 10-minute. The 30-minute is still bearish. 5-minute and 10-minute on the NASDAQ are attempting to hold, but once it goes below 250, it does become very questionable. And I do want to point out that the 30-minute was clearly rejected. All right, let's see what these goobers are saying about it.
Think of retailers, think of hotels and restaurants. Very dependent
come on,
on
get
card
4 eyes
spend.
off of this.
And also the profitability
Supreme Court
from
will
the
not issue
partnerships that they
decision
have.
on tariffs today.
So
Blue-balled again.
Let's make sure that we extend
What are the judges
access
doing?
to credit.
Yeah,
Not
I
a
don't
good
know.
idea. So are you lobbying
I
Congress
have
on
no
this?
idea.
I mean, do you think there's a realistic chance that there's bipartisan support?
But
no.
as we're waiting for this lady to get taken off the screen, I do want to remind you that tomorrow, 8:30 a.m. ET, an hour before the regular trading hours get going. Once again, tomorrow, the 21st, Trump will be doing a live speech at Davos. Big deal. We will be streaming it. So obviously, whatever you decide to do today, I wish you the best of luck. I hope you make a buttload of money. I hope you trade well. But please keep it in the back of your mind that tomorrow we have even more chaos leading us to Thursday, where we get the GDP report and the PCE inflation report. So just basically for the remainder of this week, we have crazy stuff going down every single day.
Its leadership globally, and that credibility rests partly on the independence of the Fed being sacrosanct.
SPY getting hit, the Qs are trying to hold.
And
VIX
when
is
that
climbing.
independence is challenged, then that tends to actually ironically increase the long-term yield curve rather than the opposite impact.
Do you think it's
They're
challenged?
just buying themselves time because they don't know what the fuck to do.
We all hope not.
Hey, probably not wrong there. You're probably not wrong.
Because you did just
it's
report
a tough,
it's
a tough thing because it's going to impact so many
transformation.
people.
I think 80%.
So you can't just make that decision willy-nilly.
Where you are on this journey and
little bit
what investors should
of a
expect,
potential
because you've been
VWAP
rewarded,
bounce again?
certainly in the market, along with some of the other banks.
Yeah, we really did have a strong year last year, and I'm so grateful to all of our people because they were firing on all cylinders. We saw our revenue growth in every single business line.
Mag 7 not
and
so
strong revenue
good.
growth
SPY
taking
did
share.
pop, giving some
We had
back
positive
right there.
operating leverage in every business line. We're also efficient.
Breaking down,
so
breaking
we're
down,
very
has
mindful
broken
of our
down, has
expense
broken
discipline
down, bullish,
whilst investing in long-term
questionable,
growth.
bearish. We're
And,
getting
disciplined
mixed
about our
signals
capital as
today,
well,
team.
giving plenty back to
Mixed
our shareholders,
signals.
but also making sure that we
We're
were
right
deploying
at
it against
VWAP.
high
Do we
return
want to puke it today?
opportunities. So I feel good about last year. I'm
If
more
the
excited
SPX does
about the
puke, watch
upside that
25,
lies
followed by
ahead for us.
6,800, which is pretty much right where this giant put credit spread is. That would be, if you're bearish, that would be like kind of the main target of the day.
Want to see more layoffs?
I think you'll see
who
from many
is this lady?
companies, the usual beginning of the year adjustments.
Get some better
what I
people
see
on
going
today.
In the job market in our own
Reversal
company,
incoming?
we're
Maybe.
seeing new jobs being created in areas we're
Maybe,
investing in and areas where there's
to me, it's
innovation.
indecisive. I
You
see the Mag
other
7
areas
popping a
where
little
jobs
bit.
changing,
I see the SPY
and you see
maybe
areas
trying to
where
pop in
jobs
here.
are going away because of automation, or in our case, as well as we
the
close
risk
and end up our transformation program.
is about 40
so there's a lot of
points
dynamism, but it feels
in
like
either
the normal
direction right
beginning of
now.
the year adjustments and not
Maybe
something
30
anomalous.
points in either
So
direction.
no big rounds coming, at least with regard
What
to
time
the
is it?
restructuring.
It's 10:14.
No, that's not the intention.
And not coming from AI either, because I know you're
We're
using
right
AI
at
more
VWAP.
throughout the business.
We're just pinned to
We're
VWAP.
going to see new jobs created. We're going to see jobs change, and we'll see some jobs go away.
Right here.
One
Just
of the
doesn't
data
know
points
what
I'm
it
most
wants to
proud
do.
of is
I'm really
last year,
zoomed in. I'm
over
on the 100
50%
tick
of
right
the new
here,
job
but we
openings
bounce off
had
of
a
it. We
city
broke below it.
were
We
filled
bounce
by
off
our
of
own
it. We're
employees.
pinned
So
to it.
mobility and the adaptability of our workforce is high. And so
Once
we
again,
intend
I'm
to
pretty
make sure
zoomed
there's
in on
plenty
this.
of
This is the
opportunities for
500
those
tick,
whose
which is
jobs are
once again a very
changing.
fast-moving
Okay. I would say
chart. It's
injecting a
every
little
500
optimism here
trades.
into the
We get
beginning
a new
of
bar.
Davos.
Yeah,
It's how I would
it's
characterize
Fun for
it,
stream,
Sarah,
though.
your comments.
It's warranted.
Here's
Well,
book
I know
map.
you're talking to a lot of the business
So
leaders here in the government.
the point of
as well.
control
Jane,
is
thank you for making
300.
time.
VWAP
Thanks
is
here
at
on
about
CNBC. Jane
878.
Fraser, Chair and CEO of Citigroup, David, with a lot more coming to you here from Davos.
Oh, I know it. I know it. Thank you, Sarah. During that interview, by the way, we did get word from the Supreme Court.
All right, what do
that
they
the
have to
tariff
say about the
decision
Supreme Court?
Will not be coming today. The third time that has been the case. One of
Third
these days, of course, we
time.
will get that decision, but it will not be today. We've got a lot more action coming up this
We're
hour.
waiting
as we
forever.
continue
Dude,
to
I'm going to be an
monitor, of course,
old,
a
old
volatile
man by the
market
time
with
they
the S&P
decide.
down 1.4%. After the break, Jefferies chief market strategist
Watching
David
300
Zervos will
here.
join us. We'll get his reaction to this sell-off and potentially a renewed trade
Clear
war.
smack
Plus,
at
don't
the
miss
point of
Salesforce
control.
CEO Mark Benioff. This is
But then
software
buyers
names
are stepping in
continue to
right
get
at
hit hard
VWAP.
on
Look at
growing
that.
fears
Buyers
about the
stepping
impact
in.
of AI on their business.
Right over here.
Squawk
Look
on
at
the Street
that.
is right
They're
back.
loading up at 270, just below VWAP at 78. All right, we can take these guys off. We don't need them anymore. They're kind of boring. If someone that is like of interest starts speaking at Davos during the stream, feel free to yell at me in chat. More than happy to bring them up. If you feel like a heavy hitter is saying something of importance, more than happy to switch it up. But I just don't need those guys to be 10 minutes delayed on the news that I'm already giving you. It sounds like a weird, boring echo. They're taking exciting, chaotic news and somehow dulling it down, and they're also 10 minutes late. So don't really care the most about that. Silver actually taking a dive right here. Vol taking a little bit of a dive over the past 5 minutes as we're potentially double bottoming on the S&P 500 and maybe a little bit of a triple bottom here on the NASDAQ. All I can tell you is we're just at a point of equilibrium. We can see we're bouncing between VWAP, which is this white horizontal line, and the point of control, which is also the psychological level of 300. So as we're in this 20-point region, we're just kind of awkwardly stuck, folks. We're kind of awkwardly stuck. Silver just puked about 75 cents. It went from 95 to 94. Did anyone catch this on silver? Just to be clear, I am not trading silver right now. I'm a little bit more paying attention to the S&P 500 and the NASDAQ here, just to decide what in the world's going on. I'm watching this as closely as I can to see the big buyers and sellers. And really what I'm watching is this, I suppose, of just what side of VWAP. We've been testing VWAP all day. Right when market opened at 9:31, we tested it, we bounced off of it. We tested it again 10 minutes later at 9:40, we bounced off of it. We tested it again at 9:48, we bounced off of it. We tested it again at 10:03, and we're obviously testing it literally right now. Every single time we've gotten here, it's tested. But once again, eventually trends do change, and this could be the breakdown. I don't know. We might have a beautiful double bottom. If you're bullish, your risk is right here. If you're bearish, your risk is right there. We don't have to overcomplicate this thing. We definitely don't need to overcomplicate this. Hang on. Maybe we should watch these guys in real time so you can get a better idea of, yeah, look at that. They ran it right up to the point of control and then smashed it right there at 300. Smashed it right there, dude. Dirty. Dirty, dirty, dirty. They ran it right up to the highest volume node of the day, that psychological level right there, buying galore, and wrong, rejected. This would be like if I were to play basketball against Kevin Garnett. Every ball I throw up, he would smash it right back in my face. That is gnarly. A fake out. That's a brutal fake out. If you got triggered long at like 290, 295, 300 just for it to get smashed, that's a brutal play. That's a like going into it, that looked like it was going to get going. Nope. Sell side liquidity smashed. Sell. Like brutal. Oh, that's a dirty one. They did you dirty. They did you dirty on that one. And now we're back below VWAP. Obviously, once again, this white horizontal line, and I'm just seeing some selling persist. As soon as I see it, it bounces. But let's see. So they swept. See, you can tell vol's picking up because we're making fresh highs, but we're also making fresh lows. By definition, if the bulls are getting more aggressive and the bears are getting more aggressive, this is by far my least favorite setup to trade because by definition, you have no trend, and you technically have no trend if you're consolidating when you have lower highs and higher lows and like you're kind of getting into a wedge. But at least if you're wrong, your risk isn't getting larger. At this point, if you're trading this, like at least on this time frame, just for a point of teaching here, if you're trading this and you're wrong, where do you put your risk? Because the highs are getting higher. So if you're short, okay, you are literally taking on more risk. And also same thing if you're getting long, where do you put your risk? Because it's always getting worse. Like when your highs are getting higher and your lows are getting lower, it's indecisive, but it's indecisive in the worst way. So out of the four combinations, higher highs, higher lows, that is bullish. Lower highs and lower lows, that is bearish. Lower highs and higher lows, that is consolidation. We're not really breaking in either direction. And the fourth option is what we're seeing right now, higher highs and lower lows where you're expanding. It's also referred to as a microphone pattern, whatever the fuck you want to call it. But my point is out of the four possible combinations, this is by far the worst one to trade just because by definition, your risk is getting worse. It's expanding regardless of what side you're on. So when I see this setup, the first thing I do is remind myself how much I hate it, and then I just sit there and do nothing until we have some sort of consistent higher highs and higher lows or lower highs and lower lows to see if I can identify some form of a trend. And in this one, if it recovers VWAP, I kind of like it, but what I would look for is the breakout of above 303. By definition, that's a fresh high, but I wouldn't chase it because like we saw before, you can make the fresh high and then Pew can make a fresh low. I would want to see a higher low. So I'm not chasing the breakout here, which if you do it, I do wish you the best of luck. I don't know what's happening, but I would want to see the bulls step in earlier than they did before. The last time they stepped in was at 255. So I would want to see this pullback, the higher low, and then all of a sudden you have higher highs and higher lows. That's what I would be looking for. But once again, I'm not saying the way I trade is perfect. It's not like I win on every single trade, but just trying to explain a little bit of the dynamics of And obviously, if you chased it, that's already beautiful because you could set your stop to break even and you are home free. So yeah, I guess if you were degenerate, that one would have worked, but it's just not my style. So if you took it, like I said, congrats to you. You just made money. I hope you make a bunch more money. But for me, the best way I can control my risk is not really engaging in those situations, because knowing my luck, I take this long at 10.18. I get stopped out when it breaks low at 10.19 and then it rips without me. I've been that person too many times that I just have to kind of stop myself from doing it, because you never know if you're the person who's about to get dumped on, like people were at 10.18, and maybe this was in your risk tolerance. Maybe this wasn't in your risk tolerance. I don't know if it was. I don't know if it wasn't. But look at this. They swept the high, they swept the low, and then it went anyway. It's just a brutal setup. And maybe you got a little bit lucky on this second time, but like you just never know the times it's going to go, the times it's not going to go. So like I said, just not necessarily like my cup of tea. But hey, maybe you saw something else. Maybe you're a trader with a huge bankroll and you're like, nope, every single time it touches VWAP, I buy. And at this point, your average is in at 80. You're already up 60 points. Congrats. Seriously. Congrats. I'm not going to hate on you if you're doing something with good risk control, sticking to your system, making some money. I do like this technical breakout that we got at 10.21 on both the SPY and the Qs. It took out the high from 10.06. At this point on the Qs, you could watch the high from 9.58, which is around 613.50. The SPY broke above this one here. And now at the SPY, we're actually talking about the intraday high. Wow. Okay, well, look how quickly things change. Dude, silver is vomiting over here. Bottom right of your screen, I see silver vomiting, VIX is vomiting, SPY is popping. Wow. And just like that, someone flipped the switch at 10.21, Mag 7 popping a little, right here, you could see it, 10.20. The delta is just going nuts. People are selling a little bit of puts, but more so they're buying zero DTE calls. So there's a lack of bearishness going on, but there's actually renewed bullishness once again, starting at 1020 on the S&P 500. Why is the market popping? I don't really know why, but what I can tell you is there's a chunk of zero DTE SPX calls being bought right now. Even the Mag 7 starting to improve slightly right there. Look at that pop, 1020, same thing. This is a little bit of a dip. But how much? Is it a dip to be bought? Probably not quite yet. Probably quite not yet. At least not for me. I mean, I'm not going to tell you what you should or shouldn't be doing. I'm not your mom. But as we're waiting for a potential opportunity, if you want spot gamma, remember, pinned to the top of chat, in the description of the video, 80% off. And right now, Apex, they have 2 days left, 80% off your evals with that code Goonie. That's exactly what I'm trading on right here. Granted, I haven't made any trades today, but maybe, just maybe, I'll see something that I like.
Order submitted. Order submitted.
We'll see how this goes. Oh, brother. Hang on. I'm updating my risk accordingly. I'm trying to practice what I preach rather than just preaching over here. Trying to practice what I preach. Trying to do my best. I'm looking for this breakout at 60. I think on this breakout at 60, I should be A-okay. We will see. Time will tell. What's the high? The high is 68, at least that I can see for regular trading hours. Once again, what I just placed trades on, Apex, 80% off with that code Goonie. If you want to trade with someone else's money, sim to funded prop in the world of futures trading, code Goonie, 80% off. I'm seeing a little bit of a pop. SPY did hit a new intraday high. I see vol collapsing and I see silver puking. All right. Do I want to put my stop to break even? I kind of want to give it 1 second here. How's the Mag 7? I did see that pop, which I like. The Mag 7 going flat now, so I got to be careful of a potential vomit. I see the S&P 500 still popping. Let me see this. Okay, so if you're looking at the overnight trading session high, which basically happened at 6 p.m. on Sunday, we are talking about 400 and what's that, like 72, something like that? Yeah, 472. And then what is this high? That is 440. So between 40 and 70, which is 100 points above where we are right now. And remember, in NQ, 100 points is about 2K. Something to consider. Something to consider. I'm about break even at the moment, roughly. Oh, 18. All right, I'm putting in my risk. As you can see, I'm currently risking about 20 points, which is about $400, which for my account size, for my buffers, I would consider that to be an acceptable trade. Yeah, there is a chance that it unfortunately wicks me out and bounces from there. That could happen, but also what could happen is it could just completely dump and I save myself points. So, yeah. Do you trade options or are you scalping actual shares? No, I never scalp actual shares. I trade options and I trade futures, and then I invest in stocks. So I do trade stocks in terms of trading. I'm investing in them. Same thing with crypto. I don't actively trade crypto. I invest in it. So I invest in stocks. I invest in crypto. I actively trade futures and I actively trade options. I don't scalp stocks at all. I don't scalp crypto at all, if that makes sense. But what you see on the screen in front of you is the NASDAQ futures contract. So it's like NDX, it's like QQQ, it is the tech sector, but it's on the futures market, which has some very important nuances to it. Some very important nuances to it. And do I want to go to break even right here? We're having a tough time at this 60 breakout. Remember we saw all that sell side liquidity at 60? They bumped it up to 70 and 72 for a second. I'm just trying to pay attention right there. You could see it. This red zone, that's just higher. They keep moving it very quickly. And it's back. It was there. It's back. It's there. It's back. It's there. It's back. And where they're selling is the regular trading hours, the RTH high, RTH, regular trading hours. So basically, it's the high that we've seen from 9:30 market open to this moment. They're kind of pinning it at that level right here, 68. So this high that we saw at 9:51 today. That's exactly where we're seeing in real time people trying to sell their shares, which, hey, from a technical perspective, I don't mind it. I don't mind that as a trade. I mean, for me in my position, I hope we break and we rip all the way up to 6,400, or excuse me, where the fuck did I get 6,400? Am I losing my mind today? I mean, 25,400, 6,000. I must be thinking of SPX. But I'm watching this. It's just the upper 60s are the intraday high, and that's what people are currently targeting. Might be a double top, or we might break and rip. Obviously, time will tell. Looking at the options flow, Mag 7 is still improving, which bodes well for my position. Same thing with S&P 500. It popped, it pulled back, that higher low. Let's see if this can really get moving for me. Let's see if this can really get moving for me. Come on. I just need this right here. I'm looking for this break is 69. 69. LOL. Oh. All right. I'm going to be a good boy, and I'm taking my risk off the table. My stop is at break even. This is by far my favorite thing to do. I know many people, they decide to trade by saying, nope, here's my profit target, here's my risk. I'm going to wait for one of them to get hit. For me, I think that's an inappropriate way to engage with the market. I find that the best traders in the world, they dynamically update the risk, as in they continue to take risk off the table as the trade goes in their favor, ideally making the worst case situation either break even or somewhere in the profit. So right here, if the market were to turn, okay, no sweat off my back. My stop's at break even. I understand that there's a lot of dipshit, fucking stupid traders out there, or I should say teachers out there, who try to teach this concept of like, no, don't, As soon as you place on your trade, never take in new information. Just leave your risk where it is, leave your profit target where it is. No, the market's dynamic. There's always new trades. There's always new updates. And if you're not updating your trade as new information is coming in, i.e. new candles, new price action, this, that, the other thing, like why? Why are you assuming that as soon as you place on the trade, that that's all the information you need for the trade and there's nothing else to do? It just makes absolutely no sense to me whatsoever. So for me, I placed my trade. I liked it. I'm seeing development. I see higher highs. I see higher lows. I know that we're running into some potential issues here at 70. So to protect myself, just in case I'm wrong, because I'm a 50-50 trader, I'm protecting myself. If it rips, great. I'm riding the trade. If it doesn't rip, I don't care. But I should let you know that I'm trading some of these accounts slightly differently. My smaller accounts, quote unquote smaller, as in they have left buffer, I can't let them ride because there's a max amount of money I can get on them per day. So that's what I'm locking in here at 92, which is about a 50-point trade. So that should be about $1,000 if this hits. So I am trading my smaller accounts differently than my larger accounts. The risk for both of them is at break even. I'm just taking profits earlier on the smaller accounts because of the whole dynamic of the unrealized buffer and whatnot. And if you're familiar with SIMDA funded trading, you know why I'm doing this, because I don't want that differential between my unrealized and my realized to be that large. So I would rather just lock in profits. And for me on those accounts, $1,000 is a good profit. I still don't know if it's going to hit. I hope it does. But then on my bigger accounts where I have more room to breathe, if it breaks and runs, great. I get to be able to ride that. So I am trading them slightly differently, but I'm using the same risk. Look at stop is at break even. Stop is at break even. I am not risking anything on either of these trades. The question is, how much money am I going to make? It might be zero, or it might be a nice green day. I do not know. I do not know. S&P 500 options is still popping. Mag 7 is still grinding to the upside. I like that on the SPY right here. My next target is 75. So we never really got this clear breakdown of 50. There was support at 25, really found support at 33. Look at this bar. We ripped to 50. We're climbing, climbing, climbing. Next target is 75. If you are an intraday trader, do not be surprised if on the first attempt we get rejected here. Of course, there's a non-zero chance that we pop and go all the way up to 90, but just based on the odds of how the market performs, just locked in. Bada bing, bada boom. Okay, so the small accounts just locked in 1,000. So $1, 2, 3, 4, 5, 6, 7, $8,000 already locked in, and then I have basically 18 positions still open. 15 there, 3 there, stops at break even. So the worst case scenario for me today is I make 8K. That's the worst case scenario because that would involve this getting stopped out for break even, but I've already locked in 8K. The best case scenario is this runs like no other and we get the upside gap fill, and then I lock in the big 18 accounts at those levels. So that's worst case scenario. I'm in the green today. I made 8K. I'll be able to buy myself some SpaghettiOs for dinner tonight. We're good. I was able to pay for my lunch bill. Your boy eats a lot of SpaghettiOs. That's why they call me Chef Boyardee in the streets. That's where we're at. So stops at break even. These other ones, we'll see how it goes. It would suck if it gets rejected here at 93. Oh, and the ones that locked in, I'll show you the trade. Long right there at 1025. Out right there, top ticking it at 1035. So 10-minute trade to lock in about $8,000. And then I do have some runners, but I cannot stress this enough. My stop is at break even. So on these runners, of course, like I'm a human and I'm greedy and I want to make money. So of course I want this to keep going. But if it doesn't, it's break even. I'm going to move this up to 40 just so it pays for its commissions, just once again psychologically, so I can see some green. Where am I? I'm long at 38.75. So that's $20 after commissions. I'll see slight green. If it runs, it runs. If not, whatever, shit happens. What kind of criteria do I use to pick stocks for investing? My long-term investing methodology is actually really, really simple. I pick high-quality blue chip stocks such as Nvidia, Microsoft, Tesla, Google, all these high quality blue chip stocks that I believe are going to continue to be really, really popular 10 to 20 years from now. So for example, I don't think AI is going anywhere. So whenever I see a buy the dip opportunity in a high quality AI related blue chip stock, I'm going to buy it, such as NVIDIA, Google, AMD, Avago, ASML. So it's really simple. It's honestly kind of boring. And then to make it even more simple, I now have AI strategies on both public and Street Beat that do all the investing for me. So I've created, and once again, AI runs it. So it goes like this, and you could do this on Street Beat, you could do this on public. You say, hey, I want a trading system that focuses on high quality blue chip stocks that are showing growth year over year in the AI sector, and it does that work for you. It does all the analysis, breaks it down, it updates your account, it does the buying, it does the selling. So basically, it's the same methodology, but historically I had to go do the switches myself, and now I just have AI do it for me. So it's one of those things where it's kind of out of sight, out of mind. I've been using the AI generated strategies on public and on Street Beat for a while now. And since I've been using it, they've not just been a little bit outperforming the S&P 500, but greatly outperforming the S&P 500. Could reject here? Yeah, or it could break out and run. I mean, it is a key level. Obviously, I'm not trying to hide that from anyone. We just got rejected at 93. We have 400. From there, 440 to 470 is the next level. So if it breaks from 400, I see another 40 to 70 points. It could get rejected. And because I'm not sure, I cannot tell you what's going to happen, my stop's at break even. So maybe I'm right and I get another 40 to 70 points. Well, technically another 60 to 90 points from where we are right now. And that's awesome. Or I just get knocked out and it's a break-even day. That's fine too. You're going to have break-even days. How do you allocate capital between trading accounts and investing? I just completely bifurcate them. I don't mix them. I don't commingle them. They're completely different things. I do have long-term investing accounts that are not tax sheltered. I was going to say, but it's about half and half now that I think about it, just because my one crypto account's grown so much. It's about half and half that a lot of mine are just in my long-term investment accounts. And dude, it's out of sight, out of mind. I have like alerts for when something like Microsoft, what I consider to be a high quality blue chip stock, if it dips 10 to 15%, great. I'm buying more. I put it in there. And my plan is to come back into 20 years. It's not like a really actively managed thing. All of the statistics surrounding long-term investing suggest that the more often people like mess around with it and try to time it and do this and that, it's just the worse off. Here, I'll hit you with a stat that maybe is going to prove my point about long-term investing. So Fidelity did a long-term analysis of the best performing accounts just within the world of Fidelity. So out of all these Fidelity accounts, which is one of the largest money managers in the entire world, they said, okay, like which accounts actually have the best returns? And this wasn't by a little bit. This was by a lot of it. The best accounts, the best returns at Fidelity were the accounts associated with dead people. Deceased people, as in the people who just don't touch their accounts, they just don't screw with it, have the best returns. So, and also like you can, hey, fact check me just because I'm saying this on the internet. I understand. Go fact check me. Look at the study yourself. Fidelity, and then I believe JP Morgan also reproduced it, and they found the exact same results. The best performing accounts are people who just don't fucking touch it. So for me, what do? I buy high quality stocks, especially on a discount, and I forget about it. I move on with my life. The way I treat these accounts right here, my active trading accounts, is incredibly, incredibly different than how I treat my other accounts. So Matt is saying we should die in order to get above average returns. You, at least when it comes to you and your interaction with your, I suppose, your long-term investment, you should act like you're dead. That's probably, and we're running into a little bit of a double triple top situation here at 390. What are we seeing? Okay, a lot of people lining to sell up at 400. So that's serious resistance. If it breaks, great. I see it ripping 40 to 70 additional points just based on the technical highs of the extended hours trading, but it's also serious resistance, which we just took out. Dude, we took that out like we did Maduro in Venezuela. We just fucking rammed through that. That was us showing up to the door saying, hey, we have this giant wooden horse as a gift. And then, bam, surprise, there's a bunch of soldiers in it. Bunch of soldiers. That was us knocking on the door saying, hey, knockety knock, knock, knock. Do you want this giant gift from us? We don't want to have war with you anymore. And they're like, oh, thanks for the giant wooden horse. We always wanted that. We just never got it. And then, boom, guess what's in the horse. Dude, there's honestly no difference between active trading and your knowledge of historical battles. Like, truly. Like, if you have spent a good portion of your life studying historical battles, you're going to understand that is how the stock market plays out pretty much every single day. I would recommend starting with the Battle of Thermopylae, the whole Battle of 300, and then from there, just the doors are going to open. I hate getting invaded by shoulders. It's the worst, especially if you're trying to do the Macarena. It's the worst. Anyway, we cracked 400, quickly getting rejected. That shouldn't be a surprise. I would have preferred it act like this back here at 1021 where it ripped, but we'll see. So initial test of 400 to no one's surprise, getting rejected. And now they did get a little bit filled at 400 there, but they seemingly rolled it up to 420. So let's see. Let's see if we actually hold this level or not, 400. Here, I'll mark that out on the chart, just seemingly important. You know what? We could go over to the minute chart. What time is it? Okay, so we did break above the initial balance. There are a lot of traders out there that love to, whatever direction the initial balance breakout is, they put pending buy orders at a 50% retracement, which today would be 296. I'm not going to, I have no idea if that does or doesn't play out today, but I do know the odds surrounding that trade is a very good trade. It's not a trade that you can do every single day, but once again, the initial balance is the first hour of the day, 9:30 to 10:30. You mark out the high, you mark out the low, and you pay attention to those highs and lows. And people started to notice that if you look at that 50% level, all of a sudden, depending on the direction of the breakout, whether up or down, you would go long or short at that level. So today we broke to the upside. So there are many traders out there who have a pending buy order at 97, and it's also right around 300. So that's probably just a technical level to buy. And I believe this time around, it's also roughly VWAP. So I don't know if we retrace there or not today, but a retracement to this zone, at least on the initial attempt, don't be surprised if it gets bought up, because there's multiple things coalescing right there. Psychological level of 300, VWAP, and the 50% retracement for IB. Obviously, for that to happen, we would have to break all these recent lows. We'd have to reverse trend, but it could happen. Just, I guess, something to consider. I myself like to put alerts there on the 50% retracements after we create that initial balance, just because I do think it's a trade of interest, even for me. So I just want to call that out there now that we have our teaching caps on, that maybe throw an alert at like 300, 305, just if we revert there at some point today. Would it be a bad idea to move your stop to a recent low? Not at all. I could. Well, if I wanted to be hyper aggressive, I can move it up here to 78, and then that would guarantee myself basically 40 points, basically $800. But because it's so close to price action, there's a high chance of it getting stopped out. But if it rips from here, cool. I was just better with my risk. I am consciously paying attention to 57. The reason I don't have it exactly at that level is just because if it's a fake out sweep and it just goes like 2 points and then bounces, like slightly overshoots it. So mentally, I'm kind of using 58 as my stop, which it might be getting tested pretty soon. Obviously, I don't want to overstay my welcome so much that it goes red, which is why my stop's still here. But mentally, I am kind of using this 57 level. But I am willing, especially on a day like today, when I know there's higher volatility and craziness, to give it maybe an extra 2 points, 3 points, something like that. So if it kind of kisses it and then bounces, obviously I would be using the low, but I don't like the most that it's touching. Hang on, let's go to the 1 minute. Yeah, see how my stop is right at the 1 minute 50 EMA? I feel pretty comfortable there, because if it's testing it, it might be an actual breakdown. So, I mean, in general, yes, I always want more money. Like, of course, we're all trading to try to get more and more money. And I see this 57, see this 58. I guess I'm just trying to give it like, I want to see the next pullback, which might be this. And then I could definitely move it up there. If we can take out 400 again, you can bet your bottom dollar I'm moving my stop to 58. I'm just trying to be a little bit more respectful of the fact that we have quite a bit of jumpiness today, quite a bit of volatility today. And this type of stuff that I'm talking about in real time, I wouldn't do initially. Like I'm giving it a little bit more leeway now because my stop's already at break even. If this was the difference between like, oh, is your stop in the green or not? No, I would have already done it. But once it's already in the green, you kind of like, you're taking the weight off your shoulders. You're giving yourself a little bit more, I guess, room. Hang on, see, this is kind of what I'm talking about right here. So I need this to quickly bounce out of it, and then whatever this low is, I'll be using as my risk. But I'm just wondering if it's a sweep, and it might not be a sweep. This like might be a literal change of trend. I have no idea. And if it is, once again, I cannot express this enough. The worst case situation is I'm out for break even. But what I'm gonna do, see right here, see exactly what I was talking about. 58 is like, I don't know if it's gonna sweep it by a couple points. It swept it by 4. So we went down to 54, and now that we have that extreme, it's gonna tag me. But whatever, I'm making money.
Order filled.
So I was curious, just in case it bounced all the way back up, just in case this was a fake out. And who knows, maybe this is a fake out, but I did guarantee myself money. And that was actually a really good time example of like how like, it would have overshot it. And I saw the bounce. I was trying to give it one opportunity to bounce. And of course, I should have given it, I guess, 2 opportunities. But knowing my luck, if I did that, I would have puked anyway. So just guaranteed myself money. Guaranteed myself money. And right now, remember what I said, don't be surprised about the puke all the way down to 300. In fact, if we take out 50 right here, 350, 340, this 10-point region, I actually really think we could come down to this region. I think that's a good short. I'm not going to be taking it just because it's a little bit of a counter trend move for me. Let me just double check that it's counter trend. 5 minutes bullish, 10 minute, 30 minutes trying to break out. Might be getting rejected there. 5 minute, 10 minute, 30 minute. Yeah, it's a bit of a counter trend trade for me. So what I would prefer to do is actually, if it does vomit all the way to here, I'd be looking for another opportunity to go long. So I like it. I gave myself a shot. The shot just didn't pan out today. I still made money. I'm happy with the money that I made. Obviously, my core position was this 8K that I locked in. Then we had another 15, 16, 17, 18. So that's not bad. Another 3K right there. So up about 11K on this. Once again, this is all SIMTA funded. If you're just joining in now, if you're new, I cannot there's some people who try to hide this. These are not real money accounts. Not yet. You'd have to, and I know like that sounds a little sketchy. It's just because they're SIMTA funded. I guess I don't know how else to explain it. That it's SIMTA funded trading, as in they're paper trading accounts, not real money. If you trade well enough, the companies will pay you out. But these are not like funded with actual US dollars. So as much as I'm like, oh, I'm up 11K. I am up 11K, but I'm up 11K on SIMTA funded. It's not like I can access this money right now. Now, if I follow the firm's set of rules and I do this, that, and the other thing beyond trading well, if I follow their entire set of rules, yes, I can take that money out, but it's not like I could just take it out willy-nilly. So just to be a little bit transparent, it's kind of like Schrodinger's money. It's kind of real money, but it's kind of not real money. Can I immediately take it out? No, so it's not real money. However, I might be able to take it out if I follow their entire other extra set of rules, then it becomes real money. So like I said, it's kind of like Schrodinger's money. It's kind of real money, but also kind of simultaneously not real money. So it's basically real money that gets unlocked if you follow an entire set of things beyond just trading like for profits. Like you have to follow their entire set of rules, like without a drawdown, trading X amount of days, like that type of a thing. Hey, Matt, for TPT trailing stops after 2,600. I thought it was on TPT after 2,000 a profit. Remember, folks, what did I say? Don't be surprised. Not only is it the 50% retracement to 300, 300 is a psychological level, and you have VWAP here at 290. I should have had the balls to chase this short. I just didn't want to. I gave it a shot, locked it in. If I see no other opportunity, but somewhere here, this 20-point region between 310 and 290, I do expect buyers to step in. Now, that's an expectation, I guess, somewhat of a prediction, and I understand I'm the person who yells at all of you to never be predicting, but it will be an interesting thing to see if it plays out, if I'm right on this one today. Once again, VWAP is 290, 50% retracement is 97, psychological level at 300, the breakdown here is at 320, we just double tested it. I think it's going down to somewhere right in here, and then I'll be curious. I'm just predicting. Please don't trade on this, but my prediction is it will bounce from there. But once again, that doesn't mean you just arbitrarily buy. It means, okay, whatever. A prediction's a prediction. Let's see if it actually comes to fruition. Let's see the actual price action. Let's see. Test net with payout tiers. Kind of, I suppose. I mean, I like it. I made a lot of money on them. And if you want to try it out, you could get 80% off with that code Goonie, Goonie. It's pinned to the top of chat. It's in the description of the video. My mod will drop it in chat. In fact, Chaos just did. You could go to Apex Trader Funding, code Goonie, 80% off. So you could take the test for about $35, $34. The way it works is you sign up, you take the test on a sim fake trading account. Real data, real market data, but you're not trading with real money. If you do well, pass the test, as in hit $3,000 of profit without a $2,500 drawdown on a 50K account, which is my favorite account size. There are various different accounts, so do the math. But once again, for the 50K account, which is by far the most popular, the test is, can you hit $3,000 of profit without suffering a 2.5K drawdown? If you do that, congrats, you passed the test. You go from an eval account to a funded account. I know it's called funded, but it's still not real money. It's still SIMDA funded, which basically means real market data, but just not real money backing the trades. They're all simulated trades. If you do well in that environment, once again, hitting profit targets without having certain drawdowns and trading enough days, such as 8 days, if you follow all the rules, then you can request money out, actual money out. And people make a lot of money doing it, I've, on this particular batch of accounts, you could buy a lot of accounts. I obviously have 20 of them. On my 15 accounts that are large, anywhere from 95,000 down to 93, I've been trading these since October 21st. So from October 21st, basically all of November, all of December, half of January, but also that was so about 3 months I've been trading these. And in those 3 calendar months, end of October to now basically the end of January, almost perfectly 3 months, on those 15 accounts, which remember, you're allowed up to 20. I've taken out $150,000, as in $150,000 US dollars has actually hit my bank account. So that's what I mean when it's it's Schrodinger's money. It's kind of real money, but kind of also not real money. It becomes real money if you follow all the rules, but it's not initially all real money. But once again, I've been following the rules for about 3 months, and to my bank account, it's in my bank account right now, $150,000. And I am, once again, thinking we dip all the way to here. Hey, math question. I have 20 PA accounts, 10 mine and 10 from my wife's in the same computer and trading at the same time. Is that a problem for Apex? No, because I believe the rule, and please fact check me on this, is 20 accounts per household. So 10 for you, 10 for your wife. You're still with the 20 rules per house, or 20 accounts per household. Maybe a triple bottom here at 320. I don't think that's likely. We dip there at 1024. Again, I don't think that this triple bottom's going to hold. I think there's another 20 to 30 point puke to roughly in this zone. What rules specifically? Go look it up. You can look at FAQ. You can go on my Rumble or on my YouTube. I have videos explaining them all. It's not like they're hidden. Right here, it's actually my most popular rule. Apex rules explained 2026 edition, how to pass Apex, take profit rule, or their worst rule. I have all these breakdown videos on it. You don't have to search. I understand that we live in a day and age where everyone wants to be spoon-fed everything 100% of the time, and I mean, I'm spoon feeding you, and I admit it's not 100%, but it's pretty fucking close to it. So if you can't seem to find it yourself, that might be like an internal issue to you. But once again, the place to find it, if you're just like, hey man, I just don't know where to look, you either go to the website and you click on FAQ, or you either go to my YouTube or my Rumble page, like I just showed you. The videos are live. So whether you want to read it and break it down, awesome. You want to copy and paste and put it in AI and have it break it down, awesome. If you want my video explanation, they're all up there. So that's your starting point. If there's confusion about the 30% or the MAE or the 8 trading days, I could do my best now to like try to explain it. Maybe like one of the rules confuses you, but I'm just not quite sure if you're having a tough time finding the rules or if you're having a tough time understanding them. So like I said, I'll do my best to try to assist in whatever way I can. Oh, and to clarify, there's many SIMDA-funded firms: Apex, Take Profit Trader, Lucid, FFN, Tradeify. The list goes on and on. They don't all have the same rules. They do have somewhat differing rules. So depending on the firm you're with, you might want to double check their set of rules because they are not all the same. So just to throw that out there. They're all similar, but not the same. Where does the money come from that they pay you with? All the other people failing. Most people fail either the eval or they blow out their funded account. So it's from the massive amount of people who are horrible at trading. So similar to a casino, when you win a hand of blackjack, where does the money come from? Well, it comes from all the people losing hands of blackjack. So in the world of trading, actually, most people are worse at trading than they are at blackjack. So in this, I guess, like analogy, the casino has even more money. Over the past 2 years, this particular industry of SIMDA funded has really caught storm. At this point, even in like the 2 to 3 years that it's become very popular, I think it's now a $12 billion industry. Is the like it's getting really big, like massively big. How's it taxed? I mean, I'm not a tax professional, and I just want to preface it by this. But for me, whenever I get payouts, I have to end up getting taxed as a contractor. So it's a 1099. I'm not getting taxed with capital gains because remember, these are not real trades. So in my personal experience, I've been taxed as a contractor from these companies, a 1099. But once again, that's just in my own experience. Maybe you're going to find other people doing something different, but that's, I suppose, my experience on the matter. My experience.
Order submitted.
Hang on. Can you write off your evals? The way my tax situation is set up, yes. I don't know your tax situation. I trade as a business. I'm not trading as an individual. And after speaking with my lawyers and my accountants, the evals are a business expense, while obviously your payouts are business income. So obviously, I would recommend speaking to a lawyer or a tax professional. And what I'm finding personally is just like, as long as you have meticulous accounting, obviously you don't want to play in the gray area or anything, but I keep track of all my income. I keep track of all of my expenses as it relates to not just Apex, but every SIMDA funded world. I save every single one, and that's where I'm at. But I'm not hesitating. I just want to be clear. I am not a tax expert. I am not a legal expert. This is just the advice that I've been given in my particular situation. I don't know where you live. I don't know your particular situation. I can only comment on like what my experience has been. But it seems like the main question is it taxed as capital gains? No. The way to get taxed as capital gains is to be trading a real money account. Matt, can you fill us in on your plans? Did you decide to keep a 10K buffer and take the rest out? Rob, I don't want to front run you here or anything, but you're going to find out tomorrow. Big update on that tomorrow. Big old fat update on that tomorrow. Once again, another break-even trade. Another break-even trade. Fuck it. That's not even really my profit target. It's just the way I have the ATM in. Once again, my stop's at break even. Maybe I make money. Maybe I don't make money. I don't know. You heard me trade. Obviously, you knew the trade I was looking for. I told you the zone I was looking for. It didn't dip that much, which is why I had to chase it a little bit. Maybe I'm right. Maybe I'm wrong. I have no clue. And because I have no clue, and sometimes I try to be humble enough to know that I don't know what the fuck I'm doing at any point of the day for my entire life, I set the stop to break even. I find that there's many people in this world who, whether they do or don't, they seem to be cosplaying as like knowing what's going on in the world. And I think there's a certain advantage to being a trader who just like consciously understands that you're like kind of a fuck up. You have to kind of really accept the fact that you're a dipshit, because then just maybe you will have the humility to admit to yourself that I don't know what's going on. And because I don't know what's going on, my stop's at break even. Maybe it goes. Maybe it rips. Like I said, that's not my real profit target. I just set up the ATM. What I care about is this red line. My stop is at break even. It's a free trade. It's a free trade. That's all I care about. When I say free trade, it means it's no risk to me. I'm either making money or I'm break even. That by definition is a free trade. It's a riskless trade. I refer to it as a lotto ticket play. If the lotto ticket hits, great, awesome. Like a real lottery ticket, lot of upside and just minimal downside. And in this case, it's a free lottery ticket. It's as if someone gave me the lottery ticket. Hang on. I want to take, it's my lotto ticket's about to get hit.
Order filled.
Just got hit. See that? No punishment. And if I want to, I could trade again. If I still think there's strength, like I said, it was a little bit of a chase on the entry. If I want to trade again, I could trade again, but it was just no risk to me, which is one of the beautiful things about trading futures, in my opinion, because there's no pattern day trading. So if you're trading equities, if you're trading options, there's a good chance you've battled it out with PDT, pattern day trading, below 25K. You can only do three day trades in a rolling 5-day period. It's the bane of many people's existence. Like, hey, I'm there with you. I understand it. And that's actually way back when, circa 2017, 2018, I first got interested in the world of trading futures, because I was like, oh, well, I hate pattern day trading. What's this deal? And then I found out futures has no pattern day trading. And then from there were other reasons. While before that, I was doing like binary options on futures. So I kind of knew about it, but the data sets were free, which I really, really liked because my background was computer science. And to be able to study the data of it, I didn't want to buy, I didn't have the money. I was a broke college kid. I didn't have the money to purchase options data or something like that. So futures data was free. There was no pattern day trading. There was really just like a huge amount of reasons of why I was like, yep, futures is for me. And then I had to, take a break from it for a second in 2021 and 2022 when I was covering all the craziness with AMC and GME. But now that we're seemingly past that period in our lives, I'm kind of coming back to my bread and butter, what I used to trade, just basically paying attention to options, selling some premium, and then actively trading futures. And I just kind of keep it that simple. Just wondering what the additional content would be within there. Either way, I really appreciate what you're doing. Can you explain what you get out of the Discord aside from community? So in there, you're going to get every single morning, I do a write-up of what I'm paying attention to for the day. I believe it's really good. I believe the call-outs are insanely accurate. But once again, don't take my word for it. Just ask someone in the community. And I don't care who you ask. I don't want to feel like there's pressure one way or the other. But every single trading day, I do a full breakdown of what I'm looking for that day. I comment on where the big guys are to the bullish side, the bear side, my game plan, the bull case, the bear case. So there's a full-fledged breakdown of the market, including the S&P 500, the NASDAQ, and the Russell every single trading day. On top of that, there's a mechanical, like an automated system called Piper that is basically a premium selling system that I don't perfectly myself use, but I find that it helps me set my bias on the day of should I be bullish or should I be bearish. That auto posts in there every single day. So in here, when you're like, oh, I got to post Piper, that's me copying it from the system and putting it in there. And then I post my 0 DTE trade. So on 0 DTE options, whenever I post, whenever I'm getting in, getting out, wins or losses, I post that in there. And then also my swing plays. So like obviously just for those of you who don't care about 0 DTEs, I completely understand. It is just when I get in or out of a position, whether it's 0 DT or swings, they just happen to be two different ones. That's in there. And then there's an entire library of previous streams we've done in the Discord explaining everything from interesting statistics related to the market, explaining just facts about options like the gamma. So more of like a whole library of education. But that's all stuff that's in there. Once again, obviously I'm proud of it because I run it. But please, I beg of you, do not take my word for it. Just go find someone in there and ask them, do you think it's worth it or not? Some people are going to say yes, understand their reasoning. Some people are going to say no, understand their reasoning. I just don't want anyone to like, hang on. I don't want anyone to feel like they somehow got on the situation. Like my goal by no means is to be like, I got your money, blah, blah, blah. Like that's what's in there. Do your research. Maybe it's for you. Maybe it's not for you. And I don't know. Hopefully you could be an active member of the community. And I suppose if there's specific questions you have, ask me. You could always email me, media@MatthewKohrs.com. You can DM me on Instagram, Matt_Kohrs. You can DM me on Twitter, Matt_Kohrs. So you have the option to email me, media@MatthewKohrs.com, DM me on Instagram or Twitter, and I get it. I don't want anyone to feel like they got or got taken. So if you have specific questions, reach out to me. That's not accounts run by anyone else. Like that's me running my own accounts. Check it out. Like if before you spend whatever the cost is, if you want to get clarification on something, dude, I'm around. I'm not promising you that I'm going to be responding like instantaneously, but I'm around. I'm around. All right. We pulled back. We try to pop, maybe double bottom. SPY's kind of going flat. The Qs are looking better. I would prefer that SPX breaks above 65. That would set up a very obvious test of 75 followed by 90. So if you're looking at the S&P 500, the interesting technical breakout on a 0 DTE basis would obviously be this trend line right here. You can see the 1 minute is pinned just to the EMA. So we're pretty much stuck in neutral. It's not really grinding one way or the other. If you look at the NASDAQ, it is a bit stronger. Higher highs, higher lows, a little bit of consolidation right now. You can watch this trend line breakout. I'm going to set that alert. I'm going to set this alert. And if the NASDAQ goes, remember the high from really Sunday night open to 9:30 today is 72. Very interesting target to me. Once again, the just overnight extreme. It is very useful to track those levels. And then at this point, you could either be using the risk of 60 or of 313. So either 360, 313, I think on an intraday basis is reasonable risk. Looking at the flow, the Mag 7 still getting beat up. I don't know how price is going up, but it is. S&P 500 did have a flow alert dumped all the way down to 1106, but now we are starting to see a little bit of a recovery. Been in the Discord for a minute. Lots of friends. Shout out, Matt. Shout out. That's very, very kind. Very, very kind. What are we doing? I just got a breakout alert somewhere on NQ. Okay, we're testing this trend line right here. So obviously the next test is the intraday high at, intraday high at 417. I am not going to be stupid. For the third time today, stop to break even. Folks, do you see what, like, I understand how maybe what I do is boring, but I don't know. I would rather be bored making money than like excited and amped up losing money. If you tune in here and you're like, this motherfucker, all he does is move his stop to break even when it goes a little bit in his favor, and then he just hopes it works out. And if it doesn't, he's losing no money. Yeah, I guess so. Like that's the technique. I mean, yeah, like if that's boring and you feel like I'm scamming you, I don't even have a way to retort because that's literally what I do. I do my best to identify the trend. I try to get in on said trend. If I get fortunate, if I get lucky, if lady luck is on my side and it goes in my way, I move my stop to break even, and then I hope it keeps going. And if it doesn't, I don't cry about it because I didn't lose money. So basically I have three outcomes. Outcome number one is I get in and I'm completely wrong on the trend. Well, that's why I'm always trying to identify the recent swing points, because that's my worst case scenario. So like if it gets out and like I get beat up and that's my losing trade, okay, whatever. Like I don't like it. It's not good. It's a part of trading, but that's why I always preach, okay, what is your maximum risk? Like, are you okay with that maximum risk? I try to only take trades that I'm okay with. So that's the worst case situation. The next one is like this one, or like the one before, it goes a little bit in my favor. It pops up. Unfortunately, it pulls back, knocks me out for break even. Yeah, it swept it. If I held it, I would have a better fill in here, but I don't know. That could have completely collapsed. So knocked out for break even. That's my second case scenario. My third and final case scenario is it goes in my favor. My stop's at break even. The trend continues. It keeps going and going and going. And that's where I make all my money. So, like, it's just, there's not much to it. Like it really, like I don't know. Like I'm not doing, I think there's a lot of people when it comes to the world of money and finance and the markets, I find that there's a lot of people who, is it really, I don't know if I'd consider ego issues, but there's like a sense of I need to feel better. I need to use this terminology and put this crazy shit out there that kind of justifies why I feel so superior. Not only do you see that in the world of retail trading and influencing, but you see that in Wall Street in general. The concept of we got to speak in these terms, dress up in the right suits, drive the right car. There's this clear sense of we need to like almost behave as if we're superior, because then maybe these other people will think that we're superior. And in my career of trading, and maybe I'm wrong on this, but the biggest Wizard of Oz, like that I've seen, like the wizard behind the curtain, if you will, is that it's really not that special. It's not. It's just doing the right, consistent things over and over and over again. Do I like getting knocked out for break even? No, it sucks, but it's better than losing on the trade. I'll tell you that. So yeah, every single trade I place, I obviously want to make money. I'm not going to somehow tell you that I'm some like emotionless robot and I'm like, like not cheering for it. No, I'm always cheering to always make money. But whether you're applying it to short-term trading, or maybe you have longer duration swing trades, or even you're investing, the name of the game just comes down to your risk tolerance, and more of not even your risk tolerance, but your risk management. That's all this is. The world of finance is what is your risk reward? What is your expected value? If you know those two things, you're good. You're good. So move the stop to break even as soon as it touches previous high or low? No, not necessarily. You could do that, but that's kind of where it's kind of you and how you view the market and where you think the appropriate thing is. Sometimes I'll look at technicals. This one, I front ran it. I was a little bit slow to it, but as soon as I saw these two bars, it was pretty much right at it. That's when I moved my stop to break even. Other times I'll look at the ATR. I'll look at the ATR of the 1 minute or the 5 minute. That's kind of up to you of like when you think you're defining it as like, oh, it's gone enough in my favor. That's a little bit of, I suppose, dealer's choice, player's choice, if you will. I wouldn't sit here. I mean, it would be a lie for me to say, yeah, this is like mathematically the perfect time to do it. I guess that's where a little bit of like the market intuition comes. Obviously, if I had a little bit of a better entry, I could have protected myself at 79 here. I was a little bit late at 88. It came down. I like it when my stop is below the initial balance. I like it when my stop is really below this cloud and all of that stuff. Like that's when I find my best trades are. But it happens. Like I was a little bit late to it. When I'm a little bit late, it's a trade that maybe I'm not the biggest fan of. So maybe I'm a little bit more aggressive with my stop management. If I feel like it's a super high quality entry and I'm like protected by all these key levels, yeah, all right, maybe I'll give it a little bit more room. Also, I would say the time of the day matters. I'll pay attention to volatility. Obviously, if vol's expanded, you got to give it a little bit more room because just vol is crazy. But maybe if vol is lower, if it's the middle of the day and not much is going on, maybe I'll be more aggressive. So I wouldn't say that it's like purely mechanical of like, nope, as soon as it goes 10 points in my favor, I move my stop to break even. Because the chance of the 10-point movement always being the perfect thing, that's just not true. Sometimes we have higher, lower levels of volatility, different time of the day, different announcements, this, that, the other thing. You just don't know. So like that's a little bit of, I mean, of course, like I have some statistics and stuff backing it up, and I like to tranche the day out, the start of the day, midday, and late day. And I do have different statistics of like stuff that I like to look for, but it's not always the same. It is not always the same. And at this point, I probably could have just at any of these times taken the $1,000 and just called it a day. Why did you decide to trade the 500 tick instead of the minute? No, I don't trade the 500 tick. I put it up here just because it's better for stream. I've noticed on stream that people just want to see action. They want to see movement. So if I put up the 100 tick, there's a lot of movement. If I put up the 10 minute, there's a lot less movement. On an intraday basis, I commonly use the 1 minute, the 5, the 10, and the 30. Those are like the major timeframes I look at. Generally, I'm looking for setups on the 5 minute, and then I use really the 1 minute for like better defined entries and exits. With respect to the 500 tick and the 100 tick, I'm not trading on it. It's for stream. Obviously, for a part of the show, people want action. They want movement. So 100 tick moves very, very quickly and moves very aggressively, and you see a lot. So it's just something to show on the screen. But to clarify, I have a ton of other charts. I have other monitors over here that I'm like continually watching those larger time frame ones. And then I'll drill into something here, like the 1 minute, to see like, okay, like, can I kind of fine tune those entries and those exits? I bet it is possible to find a profitable trading strategy on something as low as the 100 tick or the 500 tick, but I don't necessarily think it would be like easy. So I don't want to sit here and be like, yo, never, ever, 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 ever trade on that. I'm not that confident mathematically in my call out of the situation, but I do believe it would be difficult on something of such small time frame, just because there's so much noise. There's so much noise on it that I think it'd be difficult. But hey, if you can find a profitable trading strategy on those timeframes, all the power to you. All the power to you. Look at that. We were about to break out. Smashed. Smashed. We almost got going. Yeah, see like right here on the 10 minute, that doesn't look exciting. If I show you the 100 tick, oh wow, we were about to break out. We got smacked. So like I said, just Trump just truth bombed what we were about to go, and then Trump said something. True Social, let's see. The Department of Homeland Security and ICE might start talking about murders and other criminals that are capturing and taking out of the system. They are saving many innocent lives. There are thousands of victims and animals in Minnesota alone, which is why the crime stats are nationwide the best ever recorded. Show the numbers, names, and faces of the violent criminals. Show them now. The people will start supporting the patriots of ICE instead of highly paid troublemakers, anarchists, and agitators. Make America great again. So not related to Davos or the trade or anything. But related to, I guess, very much the mounting tensions, if you will, in the world of Minnesota. All right, I'm not seeing anything else there. Are we breaking out or not? You have that low at 61, 400. Maybe yes, maybe no. All right, before I let you guys go, the 5 minute is bullish, the 10 minute is bullish, the 30 minute is testing. If we take out the intraday high, that would also be taking out this breakout candle's high. Once again, statistically, that is bullish. When you have a bar that breaks above and then you take out that breakout bar's extreme, that is a good sign for a trend reversal. So once again, we have the attempted trend reversal here at 10:30. We would be looking for the high, which just so happens to be the intraday high at this moment. So I'd very much be watching that. With respect to the Nasdaq, 5 minute, 10 minute is bullish. And you see here, see how this bar took out the breakout bar's high. Actually, it did it even earlier. That by definition is bullish. So kind of setting up that opportunity to potentially go to 470 today. But I would want to see a little bit more strength in the S&P 500. Even though the Nasdaq is looking strong, the Nasdaq is getting its teeth kicked in. People are selling calls like no other. Looking at the S&P 500, we had a decent recovery, got hit, try to recover. Maybe it's a higher low, but if you ask me, it's kind of like indecisive at this moment in time. A little bit of a pop in real time. So let's see how this plays out. I would say on an intraday basis, things are neutral, leaning bullish, and they would be confirmed bullish by basically taking out the intraday highs, which would obviously be setting up a test of 75 and then this 10-point region between 890 and 900. That is what I would personally be looking for. But that's kind of where we're at. Obviously, things are slowing down as we're getting a little bit closer to the lunch hour. Please remember that the whole Davos craziness, it's ongoing today. Trump will be speaking tomorrow at 8:30 a.m. ET. So here's the plan. We will be posting an update video later on tonight and then streaming early tomorrow. We will start around like 8:15, 8:20 because Trump is speaking at 8:30. So right now, yes, on the daily chart, things are gapping down. If history is any indicator, whenever we gap down because of this Trump noise, the dip is bought. This time, yeah, maybe it's different, but I'm just letting you know, historically, the dip has been bought. So that's what I have for you folks. Obviously, calm, cool, collected. As always, respect your risk. I'm a big fan of taking your risk off the table as soon as you humanly can. But hey, maybe that's not your style, but it is what has worked for me. Shout out to Spot Gamma. That's what I use to track all the options analytics. If you're interested in that, pin to the top of chat in the description of the video, 80% off. And if you want to trade with someone else's money, the way I do with Apex and Lucid and FFN and Tradeify, right now Apex is running a pretty nice deal, 80% off. So you could get the eval for as little as like $34 or $35 if you use that code GOONIE, GOONIE. I truly do appreciate all the support. I'll catch you in the update video later on today. We'll be streaming early tomorrow morning. Other than that, I wish you the best of luck. I hope you crush it. I hope you make a fuckload of money. That's what I have for you. I appreciate all the good vibes. I'll smell you later.